Hello and welcome everyone. This is Professor Siddharth Surana. I hope you guys are doing good और मैं तो हमेशा मस्त ही रहता हूँ. Welcome to episode number 6 of MCQ season 3 applicable for May and November 22 exams. Last class, long class, we completed TDS and similarly that will also happen for the next couple of classes. I want to finish the MCQ season in single digit episodes, so we will be having more and more questions. Quickly moving on. Next chapter that we have, chapter number 28, that is advanced tax. Some of these chapters are very small, easy and basic chapters, so they are going to get over very fast. But in this episode today we will be covering an all important chapter called transfer pricing, and we will also be covering we will start our volume 3, so we will be having salary, house property, which are small chapters, and a good number of questions in PGBP. PGBP alone has got 360 questions, so that cannot happen in one episode. It has to split over multiple episodes, and thus some questions of PGBP also we will complete, so that in the next episode all the balance questions of PGBP can be completed. But for now, advanced tax, as per section 208, obligation to pay advanced tax arises when the advanced tax payable is the threshold prescribed 10,000 or more. Mr. Nagraj, age 65 years, has income tax payable of 30,000 during 21-22. His source of income was IFOS, capital gain and house property. Is advanced tax payable even if it is 10,000 or more, but there is immunity granted to resident, senior citizen not having PGBP. So he is not mentioned, therefore he is resident, senior citizen not having PGBP, so advanced tax payable no. An interior decorator has opted for presumptive taxation. Is he liable? Yes, liable. 44 AD and 44 ADA, one installment. Due dates of advanced tax for non-corporate assessing. Now corporate, non-corporate is same. Once upon a time corporate and non-corporate was different, but now corporate and non-corporate is same. So 15 June, September, December and March. How much of the advanced tax is payable in each installment? 15, 45, 75, 100. Advanced tax installment for assessee declaring income as per 44 AD. Anybody who is declaring income as per 44 AD, there is only one advanced tax installment, and there is 15th March. So 4 installments not applicable, only one. Mr. A, age 59 years, won 60 lakh rupees. B, age 50 years, won 8 lakh rupees from lotteries. Tax deductible at source under 194B was duly deducted. Assuming that this is the only source of income of A and B, are A and B liable to pay advance tax? So we will have to do their calculation, and like most practical questions, this sum has already been solved by me. So we are talking about two people. A has 60 lakh and B has got 8 lakh rupees. Both of them have earned casual winning. What is the difference? A is 59 years, won 60 lakh rupees. B is 50 years, won 8 lakh rupees. So what is the difference? That way, if one has to pay, both have to pay. But no, there is going to be a difference. Basic tax on casual winning will be 30% on the respective amount. So that will be 18 lakh and 240. The difference is that in case of A, we will be adding surcharge because the income is exceeding 50 lakh. But here there will be no surcharge because the income is up to 50 lakh. And this is going to make the real difference. If you will go and see, your basic plus surcharge will become 1980, 240. And after adding HEC of 4%, you will get 20, 59, 200 and 249, 600. Now the question is saying that TDS of 194B is deducted. 194B is deducted at 30%. If the payee is non-resident, then we also deduct surcharge and HEC. But here the payee is resident. So we will only be deducting 30% of this amount and 30. So the TDS that will be deducted will only be 18 lakh and 240 respectively. So if this is your liability and this is the TDS, this is your liability, this is the TDS, the balance amount you will have to pay. Now after adjusting the TDS amount, the final payable, the main thing is that this question is testing that whether you know in resident TDS we don't add surcharge HEC except salary. So we will not add surcharge HEC, and thus there will be a difference. This will only be 9,600. This will be 249, 200. In the case of B, the final payable is less than 10,000. So advanced tax is not applicable. But for A, advanced tax will be applicable. Only this TDS and the 10% surcharge aspect can decide whether you will understand what is happening here or no. Accordingly, A has to pay, but B is not liable to pay advanced tax. That is given in option C. Rajesh is engaged in the profession of technical consultancy and gross receipts is 45 lakh. He does not maintain books. That means he will go for presumptive. He is also partner of LLP Rajesh LLP, which carries on profession of technical consultancy. The gross receipts of Rajesh LLP during 21-22 are 48 lakhs. Which of the following statements are correct? Which of the following statements are correct? Rajesh will be taking presumptive taxation. So Rajesh will be paying advance tax only on 15th March. And Rajesh LLP also, you might be thinking, sir, less than 50 lakhs, so presumptive taxation mein jayega, and therefore LLP will also pay the advance tax only on 15th March. Primarily that may be your answer, yes or no, and therefore you may get the answer as Rajesh and Rajesh LLP both have to pay on 15th March. But do you know about the amendment that has come in 44A DA, that now this section is applicable only to resident individual and resident firm not being LLP? Not being LLP. That means this LLP will not be eligible for presumptive taxation even if the turnover is up to 50 lakh. That means LLP no presumptive tax. Normal, and normal means LLP has to pay all the 4 installments. But Rajesh has to pay only. Rajesh is an individual, so he will go for presumptive. So the printed answer is wrong. The reason why it is wrong is because it is based on the erstwhile law. The amendment erroneously has not been incorporated. Here Rajesh will be paying only on 15th March because he will take presumptive. But LLP will not be eligible for presumptive because the LLP will not be eligible for presumptive. The LLP will pay only one installment of, the LLP will pay, sorry, all the 4 installments, and thus Rajesh has to pay 15th March, but LLP has to pay all the 4 installments. Printed answer is A. Please make sure that you rectify it, because the printed answer is before amendment. After amendment, LLP does not have presumptive, all 4 installments. Rajesh will have only 15th March. Exemption from payment of advance tax, please correct, it is not 8 ka answer is not A, it is D. Exemption from payment of advance tax under 207 is available to whom? Non-resident having income from house property? No. Resident senior citizen. Resident senior citizen having no income from business, that only is our option. Companies, no. Presumptive taxation, no. They have to pay last installment. So immunity is only to this. Sarthak, a non-resident, age 65 years. 65 years. Is a retired person earning rental income from property in Mumbai. He is residing in Germany. Apart from rental income, he does not have any other source of income. Is he liable to pay advance tax? First of all, you will think, sir, senior citizen, no PGBP. No, he is a non-resident. That means he has to pay PGBP. Resident, nahi hai. It is non-resident. So he has to, and even if it has PGBP or no, facility is not available to non-resident. So he has to pay because his liability will come to 10,000 or more. So we will have to check. We will have to check what is his tax liability. What is his income from property? 40,000. So 40,000 के हिसाब से his total rental income is going to be 4,80,000. 4,80,000 is also the rent earned. From this you will be granting 30% standard deduction. 30% of 480 will become 144. This will be your balance income which will be taxable. Whatever you are getting, I think you will get 336. On that, even if he is senior citizen, basic exemption will be 250. So remaining 86 will be taxable at 5%. That will give us a tax liability of 4,300 only. Yes, that senior citizen wala facility is not available. But then ultimately there are 2 immunities granted in income tax. Resident 60 years, no PGBP, and second is payable amount up to rupees 10,000, means up to 9999, exact 10,000 you have to pay. So senior citizen ka facility will not be available, but because his liability is less than 10,000, he will not pay advance tax. So no, he will not pay as his liability is less than 10,000. This is the reason. As he has no income chargeable, that facility is available only to resident. No, as he is 60 years more, no, that is also only for resident. The reason why he will not pay is because his liability is less than 10,000. So the only correct answer here is going to be B, because only second point is right. Next chapter, 234 ABC. When is 234A levied? 234A is levied whenever your return is not filed within the prescribed time. For deferment of advance tax, means non-payment of advance tax is 234B, but late payment of advance tax, 234C. Non-payment or short payment of advance tax, that will be your interest under 234B. State whether true or false, no interest under 234A shall be charged on self-assessment tax paid by the assessee on or before the due date of filing return. True, that's the Supreme Court judgment, Pranay Roy. If you pay tax, then 234A will not be charged. Interest under 234B will be leviable when your advance tax paid is less than 90%. If you pay less than 90%, then there will be a shortfall. Interest will be payable. When regular assessment is made, interest under 234B will be leviable from what date? 1%, but starting from first day of assessment year till the date of regular assessment order. From 1st April of assessment year the regular assessment order. 234C, interest will not be leviable if the second installment is paid up to. You get 80% facility in the first two. So 15K place pay you can pay 12 and 45K place pay. Second installment mein you can pay up to 36. Third installment of advance tax is not paid within the specified period, then interest will be calculated for the first installment, second installment and third installment period will be 3 months. But for the fourth installment, the period is going to be 1 month. 234D is levied when you take excess refund under intimation. When refund granted under intimation is more than the refund allowable. Assessee was required to file TDS return for third quarter on January, but filed on 28th February. The total TDS is 5,000. What will be the fees? 28 days ka delay into 200 will give you the answer 5,600. Remember that the fees cannot exceed the amount of TDS and thus your fees will be only 5,000. For default in furnishing return of income, fees for default in return of income will be 1,000 if the net taxable total income is up to rupees. Up to what amount of net taxable total income will you be liable for 1,000 ka fees? If it is up to 5 lakh, then fees will be 1,000. Demand of 10 lakh was issued, appeal was filed and tax amount increased to 12 lakh. Fresh notice has to be given for how much? We have already issued demand notice for 10 lakh. That demand notice will be valid. Now, if there is additional liability of 2 lakh, then we need to give you demand notice only of 2 lakh. Mr. A, whose total income is 495, required to file return but filed late. What will be the fees payable? Fees payable will be only 1,000. Income up to 5 lakh, it will be 1,000. Income more than 5 lakh, it will be 5,000. 10,000 fees is now eliminated. Next chapter, refund. When will refund arise? When does refund arise? Whenever there is excess TDS, excess advance tax originally paid on was reduced because of appeal revision. In all these cases, assessee will be eligible for refund. Intimation under 143(1) would be also deemed to be demand notice. If there is anything payable in the intimation, then you have to pay it. All the claims of refund should be made only by way of ROI. Once upon a time there were multiple facilities, but now there is only one option. In case of clubbing, refund can be claimed by whom? Person whose income is included in other person's income? No. Person in whose income that income is included. So 4 will be B. When refund is out of advance tax and return is filed before the due date, then interest will be calculated from advance tax, TDS, all that 1st April of assessment year if return is filed on time. So 1st April of the assessment year will be starting date of your interest. Rate of interest on refund payable to the assessee. Whenever they will charge at 1, but when they will pay only 0.5%. If amount of refund is increased due to order of appeal or revision or reference, then what will happen to the interest? If refund is increased, obviously the interest will also be increased. When any refund is granted to the assessee under 143(1) and no refund is due on regular assessment, then what will the assessee pay? What interest? Normally they charge 1%, but here in 234D they will charge only 0.5%. The liability of Mr. Sunil for 2021 came to 154. He has paid advance tax of 138 and TDS 44. So the total taxes I think are coming to 182, 178 and 4, 182, and his liability is coming to 154. He filed return of income claiming the refund. His assessment was completed under 143(1) and 15th February he was granted refund. Subsequently, the case was selected for scrutiny and his income was assessed. As per the assessment order, his income was recomputed after certain additions and revised tax liability was 176. That means tax of 154 has become tax of 176. That means there is an increase in 22,000. Whether he will be liable to pay any interest on the excess refund. He has taken refund of, he must have taken the refund of the difference 32,000, but he is liable only for 6,000. See how? Liability is 154. He is claiming credit of 182. That means he must have claimed refund of 182 minus 154. He must have claimed refund of 138 and 44, 182, and his liability is only 154. That means he must have claimed 26,000. But now we are increasing your liability. We are increasing your liability from 154 to 176. We are increasing your liability from 154 to 176. Even if the liability increases, the credits that you are getting will not change. So you have taken credit of 154. You have taken refund of 28,000, not 26. You have taken refund of 28,000. Okay. If we change your liability and make it 176, this remains same. That means you are eligible only of 6,000. That means what is your eligible refund? 6,000, because finally your liability decided was 176. But you have taken refund of how much? 28,000, because earlier you showed liability only of 154. These credits will be available irrespective of what the case is, because you paid advance tax. That means he will have to refund 22,000. In fact, 0.5% interest also he will have to pay. And for how many months? From the date of granting refund till the date of completion of regular assessment. So 15th February to 14th March, 14th April, May, June, July, 14th August, and part of a month will be rounded off. So 7 months. Sunil will be liable to pay interest on excess refund of 22,000 at 0.5% for 7 months, and that also is your option 9A. Recovery proceeding, very easy, only one question. Mr. Raju is leaving India for USA on 10th June 21, and it appears to the assessing officer that he has no intention to return to India. Means, can I say this is a person who is leaving India, and once he does not return to India, it is possible that there will be a problem in tax collection? Mr. Raju will be required to pay tax on which income? Only previous year 2021, or this period of the current year up to 10 June? He has to pay all his taxes. If you are leaving India, pay taxes and go. So last year's income and current year's income up to 10 June, he has to pay tax on the total. That's your chapter, recovery proceedings. Now we come to an important chapter, transfer pricing, also relevant for your international tax, and we have all the new case studies of ICAI also included here. Okay, so we have about 40-50 questions, exact number I don't remember, we will see. Okay, but good number of questions. Provision relating to limit of interest deduction is in respect of debt issued by a non-resident associate enterprise would not apply when the expenditure is when 2.1 may it will apply, 2 may apply, 1.5 may apply, only 1 may, because 94B is applicable only when the interest exceeds 1 crore. In respect of any payment made to a person in NJA, tax is deductible at what rate? 30. Now see, if they give 30, you have to choose 30. If they give 30 plus cess, then you have to choose that. You have to choose the most appropriate answer. Interest paid to non-resident associated enterprise disallowed under the relevant provision during AY 20 to 23 can be carried forward 8 years after the current year. So AY 20 to 23 ka disallowance can be carried forward for 8 years. So AY 23, 24, 25, 26, 27, 28, 29, 30 and AY 30, 31 tak you can carry forward 8 years. Fly Limited Indian company has to make secondary adjustment if the primary adjustment is how much? At 2 crore, 1 crore, 0.5 or 0.7, only if it is 2 crore, because secondary adjustment has to be made only if the primary adjustment is exceeding 2 crore. If an Indian company has entered into advanced pricing agreement in respect of international transaction with associated enterprise, company decides to make application for rollback. Means company wants last 4 years ko bhi, current year plus next 4 it is applicable, but company wants rollback. However, rollback provision shall not be available if they have given some conditions, then we have to choose which is right. Such application has the effect of reducing total income. Yes, rollback is not available in any such year. The arm's length price determination is subject matter of appeal before CIT appeals. No, that is not going to affect rollback. If it is appeal of ITED, then it will affect. Determination of arm's length price has been subject matter of appeal before tribunal, then rollback is not going to be available. Rollback will not be available if it is subject matter of ITED. And the return of income has been furnished under 139 for belated. Belated return may be rollback not available. Rollback not available if it is belated return, if it is reducing income, or if it was subject matter of ITED appeal. CIT appeal is not covered, and therefore only 1, 3 and 4 which is given to us in option D. XYZ Limited has entered into specified domestic transaction during 21-22. Company failed to obtain a report from CA and furnish such report under 92E before the due date of furnishing return. Is there any penalty imposable? CA ka report not furnished, and therefore you will be liable for penalty of 1 lakh flat, section 271 BA. Y is a foreign company having permanent establishment in India, namely X. Z, a non-resident associated enterprise, has invested 900 crore through debt in X. Earning before interest, tax, depreciation and amortization, Ebitda of X during the financial year was 150 crore. Compute the amount of interest allowable in respect of debt, assuming that the debt was invested on the first day and interest rate is 10%. So actual interest will be 900 crore ka 10%, that is 90 crore. And what is 30% of Ebitda? 30% of 150 will come to 45. So what is going to be your allowable interest? Even if even if we have invested money through, if the payee for interest is non-resident associated enterprise, then the limit will be applicable. So actual interest or 30% of EBITDA, whichever is lower, 45 crore will be your deduction. In case where primary adjustment to transfer price is made suo motu, that means you have made primary adjustment, then you have to make secondary adjustment and get the money repatriated. Time limit is going to be 90 days from due date of return filing, that is 90 days from 30th November. A Limited, an Indian company, has a wholly owned subsidiary in Sri Lanka and it extends corporate guarantee to the said non-resident subsidiary. If the amount guaranteed is 90 crore, AO has to accept the guarantee fee declared by A Limited. If the guarantee fee declared is, now this is basically safe harbor rules which is not much relevant, but just for your knowledge, corporate guarantee fees, if you give a corporate guarantee and you are getting fees for paying that corporate guarantee or accepting that corporate guarantee, the fees AO has to accept if you are declaring at least 1% of the guarantee. That means if you give a guarantee of 90 crore, so minimum 90 lakh you have to declare. If you declare 90 lakh, that means you will be eligible and the AO will not question, he will accept your price. Country A is NJ, then rate at which interest receivable from infrastructure debt fund is taxable in the hands of RAM, and the rate at which TDS is deducted. If interest is paid from infrastructure debt fund, rate of tax will be 5%, but because it is NJ, TDS will be 30. So first they are asking rate of tax, then 30. Rate of tax 5, rate of TDS 30. Rate of tax 5, rate of TDS 30. ABC Limited has two units. Unit 1 is engaged in power generation business and Unit 2 is engaged in manufacture of wire. Both units were set up in Karnataka in 2017. In 21-22, 20 lakh meters of wire are transferred from Unit 2 to Unit 1. So, Unit 1 will be requiring wire for power generation. So, we are transferring at 125 per meter when the market price was 180. Which of the following statement is correct? See, power generation business will be eligible business. It will get deduction. And wire business is not eligible business. So, we are purposely selling at lower price. It is 55 per meter into 22 lakh meter. We are purposely charging this much price less. Why? Because power generation will show less cost. So, more profit eligible for deduction, and wire business will show losses. It will show less profit. For obvious reasons we are doing it. We have to decide whether transfer pricing provision is applicable. First of all, it is domestic case, and in domestic, transfer pricing is applicable only if the total exceeds 20 crore. Now, when you do 22 lakh ka 55 se multiply, you will not get 20 crore. So, honestly speaking, my answer was always that transfer pricing provision should not be applicable. But the truth is that when institute decided to give the suggested answer, they did not see the difference. That when we say that transaction with associated enterprise exceeding 20 crore, you don't have to see 22 lakh into the difference of 55. You have to see the transaction price, the total transaction value. You don't have to see the difference, you have to see the transaction value. If that is exceeding 20 crore, then transfer pricing provisions will be attracted. Next, this is a calculation on the interest, notional interest under secondary adjustment if the money is not repatriated. So, there will be a little revision of that provision also. Kaveri Limited is an Indian company in which Andes Inc., a company holds 30% shareholding and voting power. So, associated. During the previous year 18-19, the company supplied computers to country A based company at CAD 2200 per piece. So, Kaveri is selling other people at 2200. Price of computer supplied to other unrelated parties is 2500. Okay. So, Andes Incorporation, which is our associated enterprise, isko we are selling at 2200, but unrelated parties ko we are selling at 2500. To the country A based company, Andes, which is our associated, we are charging 22, but other people we are charging 25. During the course of assessment proceeding, AO carried out primary adjustment and added a sum of 138 lakh, being the difference between actual price of computer and arm's length price 500 pieces. So, of course, 300 is the difference multiplied by 500 and it is in a foreign currency. So, uska exchange rate also we must have multiplied 138 lakh being the difference for 500 pieces, and it was accepted by the assessor. The AO passed the order in which the primary adjustment were made on 1st July. Matlab this case, the primary adjustment is not done suo motu by the assessee. Primary adjustment is done by the AO in the order. AO के order में primary adjustment is done. When AO के order में primary adjustment is done, and that time 90 days is not counted from due date of return filing for repatriation. 90 days is counted from this date. So whenever assessee makes suo motu adjustment, 90 days will be counted from 30th November. But when the AO makes primary adjustment, 90 days will be counted from this date, 1st of July. On account of this adjustment, the excess money 138 lakh is available with NDES, the country A organization. What would be the effect of this transaction while computing the total income of Kaveri for AY 22-23? Assuming that Kaveri Limited declared income of 220, excess money is still lying with NDES. Matlab we have not repatriated. Kaveri Limited has not opted to pay. Remember, you have the option, you pay 18% plus 12% plus 4%. Then secondary adjustment is not required. So they have not opted, and the rate of exchange given is 92. So that means, see, 300 is the difference. Multiply by 500 pieces. This will give you in foreign currency. When you multiply by this, you will get 138 lakh, which is also the amount of primary adjustment. 1 crore 38 lakh, and mitro suno, it is more than 1 crore, so this provision is applicable. Otherwise, we would have said, if it was less than 1 crore, no, we would have said provision is not applicable. And they have given you 6-month LIBOR on 30th September. So we need in foreign currency for interest rate, 6-month LIBOR on 30th September plus 3%. That means the notional interest will get added at 13%. What is the amount of primary adjustment? 138. This is more than 1 crore. So you have to do secondary adjustment. But if you don't repatriate the money within 90 days, 90 days will be counted from this date, and the money is still not repatriated. That means we will have to count interest. 138 lakh at 13%, and the period will be from the time the AO passes the order till the end of the year. We have to compute the interest only for AY 22-23, only for the current year. So from 1st July till 31st March, how will we calculate our interest? 138 is the amount of adjustment, more than 1 crore, so we will do 6-month LIBOR plus 3%, so 13% we will charge. And how? July may we will take 30 days. See, AO passed the order on 1st July. You should repatriate in 90 days, which you have not done. So interest will come, but interest will start from 2nd July. Interest will start from 2nd July and up to 31st March, because we have to compute only of AY 22-23. So from 2nd July to 31st March. So July ka 30, then it is easy. August, September, October, November, December, Jan, Feb, March. Divide by 365. So 138 lakh ke upar 13%. LIBOR plus 3%. And from which date? From the next day after the AO's order. This period ka interest will be added. That will be the notional interest that will be added. So 13.418 will be added in the income of the assessee. 13.418 will be added. XYZ Limited has failed to report international transaction entered with PQR, which is a specified foreign company related to XYZ. What would be the penalty liable if you fail to report international transaction? First of all, it's a case of misreporting. Do you understand? It's a case of misreporting. So misreporting ka 200% and failure to maintain data document information. So you will be liable for 2% on the value of transaction with respect to 92D, and then 50 is not applicable. It's a case of misreporting. So 1 and 3 both will be applicable to you. Alpha Limited's total income for AY 22-23 has increased by 34 lakh due to application of ALP by AO on transaction of purchase of goods from its foreign holding company in respect of a retail business carried on by it, and same has been accepted. Business loss cannot be set off. No, we have restriction only on tax benefit. Deduction under chapter 6A cannot be taken against the enhanced income. UAD can be taken, and now they are saying all three cannot be taken. See, business loss and UAD can be taken. Business loss and UAD can be taken. Only what will not be allowed? Only the chapter 6A deduction part will not be allowed. 10AA chapter 6A, that will not be allowed. Next, ABC has undertaken international transaction of 100 crore with associated enterprise BLK in UK during 21-22. It has failed to furnish report from an accountant as required under 92E. So what will be the penalty? Failure to furnish report. That means international transaction not reported. That means 2% of the value of transaction, as well as 1 lakh for failure to furnish report. See, if they would have given 1 lakh, 2 lakh, 3 lakh, 5 lakh, we would have chosen 1 lakh. But if they give you both options, then this is the most appropriate answer. Under which of the following methods arm's length price shall be arithmetical mean of all the values of the data set, irrespective of number of entries? See, if it is cup method, RPM, CPM and TNMM, and we have 6 or more entries, then we have to do range concept. But PSM and any other notified, we will always do arithmetical means. So in these methods, we have to do range concept. Here it will always be arithmetical mean. Which of the following statement is incorrect? Incorrect we have to find out. ALP shall not be used if use of ALP results in deduction. It's a correct statement. We have to find out incorrect. Deduction of chapter 6 at NAA not available in respect of increased income. Correct statement. So not our answer. Transfer pricing applies to specified domestic transaction if their value in aggregate exceeds 20 crore. Yes. So D is only the penalty shall be levied if the income increase because of order of transfer pricing officer and assessee has failed to file transfer pricing report. If the income is because of transfer pricing officer, then 270A cannot come. It is not a case of under reporting or misreporting. So this is the incorrect statement. Right answer. In respect of any payment made to a person located in a notified jurisdictional area, the TDS has to be deducted at what rate? NJA ka TDS 30. Now if there was one more option 30 plus HEC, we would have chosen that. Dhanush sold shares in both L and M in the context of transfer pricing. L and M can never be associated. No. If he is holding 26 or more in both, then L and M will become associated enterprise. L and M are deemed associated enterprise if he holds 26 or more voting power in both of these. So same person holding 26 in both, L and M will become associated. This is only right, but let's see. L and M are deemed associated enterprise if he holds 26 voting power in L, which in turn holds in M. No, then L and M are directly associated. Dhanush holding is no relevant, has no relevance. L and M are deemed associated enterprise if he holds 52 is not the criteria. Anyways, we know B was the right answer. The AO has referred international transaction A to the TPO. The assessee during relevant assessment year has also done international transaction B and specified transaction C. What is the TPO examining? TPO can examine your international transaction whether referred or no, but TPO cannot examine your domestic transaction, and thus he can examine A as well as B. Alpha Limited has entered into international transaction and is subjected to transfer pricing regulations. Assuming that there has been increase in total income of Alpha Limited by rupees 3 crore due to application of arm's length price and same has been accepted the said sum of 3 crore, what will happen? Is not required to be repatriated? No. Secondary adjustment has to be done if the primary is more than 1 crore. So, wrong answer. Not required to be repatriated if it is due to whether APA, whether safe harbor rules, you have to do repatriation. Only immunity is if you pay 18% plus 12 plus 4%. Need not be repatriated in case 1 and B? No. Has to be repatriated, failing which it will be deemed advance except if a one-time tax is paid. Which of the following dispute resolution measure provide taxpayer to option to determine transfer pricing of an international transaction in advance? Advance may if you want the pricing, then you can go for APA. A Limited in India makes technical service takes technical services from B Limited, a foreign company, in NJA, and B Limited holds only 1%. Then which is correct? Whether you hold 1 or no. NJA matlab mandatorily treated as associated. A and B shall be deemed associated. That is only right. That is only right. 40% is wrong. Deduct 30% TDS, but B cannot claim refund. That is also going to be wrong. Which of the following statement? Acha, they are asking for which of the following statement is not correct. Which of the following statement is not correct? So we have to search for the right statements. Right statements will not be our answer. The wrong statement will be our answer. So A Limited and B Limited shall be deemed to be associated enterprise. That's the correct statement. We have to search for the wrong statement. Permissible variation of 3% under 92C shall not be available. Before range concept came, there was this point of 3% variation allowed, but it was not allowed in NJA. So this is correct statement, not our answer. TDS will be 40%. This is the wrong statement because TDS, as we know, that it is going to be 30%. TDS is going to be 30%. Okay. Two methods are found suitable for determination of ALP. As per cup method, it was 1200, and as per RPM, it was 1250. When we have two prices, what will we do? We will take the simple average 1225. Mr. Wallish is a citizen and resident of Cyprus, assuming Cyprus is NJA. Rate at which interest receivable from infrastructure debt fund is taxable for Wallish, and rate at which TDS is going to be deducted. Rate of tax will be 5%. TDS will be deducted at 30%. So tax rate 5, TDS rate 30, given to you in option A. ABC Private Limited and XYZ Private Limited are related parties defined under 40A2 who have entered into transaction of purchase of goods of 25 lakhs on 2nd April 21. ALP is 15 lakh. Aggregate value of such transactions is 22.5 crore. Can the transaction be treated as specified domestic transaction? When domestic transfer pricing was introduced, these related party transactions were also covered. But over the years, amendment took place and now it is not covered. Transfer pricing provisions for this case is not going to be applicable. 27. A Limited is an Indian company, borrowed money from B Incorporation in country B, C Limited in country C, D Incorporation country D, and E in country E. That means A has borrowed money from B, C, D, E, B, C, D, E, B, C, D. These are the four lenders. Amount borrowed 15, 25, 25 and 15 crores. And interest during the year is, we can see 10% interest is being paid. So 1.5, 2.5, 2.5, 1.5. Whether it is an associated enterprise. First of all are non-residents. It is an associated. So 94B is applicable. 94B is applicable. But C and E are not related. So B and D are related. C and E are not related. As of now, we will apply 94B only to the total of 1.5 and 2.5. B Incorporation has provided guarantee of loan taken by A Limited from C Limited. Oh, B is giving guarantee of this loan. Means even if this is a third party, the guarantee is given from associated enterprise. So for 94B, this will also be treated as associated enterprise. This interest will also be covering in 94B. We will be covering in 94B. D Incorporation has deposited 15 crore with E. Oh, that means this loan that I have taken from E 15 crore, that money was given by D. In other words, what is the question trying to say? Please pay attention. Please pay attention. These two are associated. B gave guarantee to C and therefore C becomes associated, and D gave money to E. So that means all four become associated. Total interest, that is 8 crore, will be subjected to the limit of 94B, 30% of Ebitda. All four are associated. B and D directly, C and E indirectly, all four are associated. The Ebitda given to you is 10 crore rupees. So what is our interest? 8 crore. Ebitda is 10 crore. So maximum interest that will be allowed will be 30%. That is, have I solved it? I don't remember. No, I am not. Maximum 30%, 3 crore. That means our interest is 8 crore, but we will get deduction only of 3 crore rupees. And we are applying 94B because interest is more than 1 crore. Otherwise, 94B is not applicable. So 3 crore is our allowed deduction. That's given in option B. You will select option B. Out of total interest of 8 crore, 3 is allowed. That means the amount disallowed will be. This is the option that you have to choose. All those who choose B, gaya, khatam. Under which of the following cases will arm's length price be determined by considering the median of the data set? When is median applicable? First of all, PSM and any other notified, always simple average. CUP, RPM, TNMM and cost plus are the methods where range concept applies, but only if 6 or more entries. So here also range concept is not applicable. So remaining 3. In remaining 3, we have to see, is the arm's length price, does the price at which transaction undertaken falls within the 35th and 65th percentile? If yes, that means our transaction is within the range. If our transaction is within the range, then we don't need to take median. Then our transaction is the answer. So within the range. So no need to take median. And if it is not within the range, then we have to take median of the data set. When does median apply? When our transaction is not within the range. So cost plus method and not within the range, and therefore only option 4. That's your answer. Means correct answer is C, because only in the 4th case. Case study 29, 30, 31, 32, 33, 34. 6 question based on the case study. Very big question. Let's see what do we have. On 1/4/21, UI Limited, an Indian company, borrowed 50 crore at 9.5% from M Incorporation, a US entity, thereby increasing total borrowings to 65 crore. So what is the total borrowing? 65 crore. Out of that 65 crore, how much have we borrowed from this person? 50 crore. That means it's a huge part of our borrowing. It will become an associated enterprise. Said loan is guaranteed by H Incorporation, another US entity. The place of effective management of both M, H is in the USA. Means both of them are foreign companies, and from one of them we have borrowed. The total assets of UI is 180 crore. What is the total asset? 180 crore. UI Limited imported turbo equipment worth 30 crore from H Incorporation. Means from this company we have imported equipment. Import duty paid is 4.5. So total cost is 34.5, and the same was paid by us. The equipment was sold to T for 40 crore. Normal gross profit margin in an uncontrolled transaction is 20%. मतलब normally we must be earning profit margin of 40 का 20% 8 crore. That means our cost should be only 32 crore, but we are showing cost of 34.5 because we are taking it from an associated enterprise. Because H incorporation is giving the guarantee, it becomes an associated enterprise. I hope you understand. That means our normal cost should be 32, but we are showing cost of 34.5. Net profit of UI Limited was 8 crore after debiting interest of 6 crore, out of which 1.25 is with respect to local borrowings, depreciation of 2.5 crore and income tax of 1.5. So if we ask what is Ebitda, Ebitda will be 8 plus 6 plus 2.5 plus 1.5. Ebitda will be 18 crore. 8 plus 6 plus 2.5 plus 1.5. Earning before interest, tax, depreciation and amortization will be 18 crore. 8 plus 6 plus 2.5, 1.5. And remember that in the total interest of 6 crore, 1.25 is domestic. So it is not paid to non-resident associated enterprise. That interest will be fully allowed. What is the remaining interest from 6 crore? 6 minus 1.25, 4.75 will be our remaining interest. And if you carefully observe, 50 crore at 9.5% per annum on 1st April. This is only that 4.75 crore. Matlab, listen, to our non-resident associated enterprise, we are paying 4.75 crore. And to other people, domestic market, where 94B is not applicable. 94B will apply on this. It will not apply on this. And that is making our total interest 6 crore, which is also given to you. So, our related non-resident party 4.75, other party in domestic market 1.25, total interest 6. Depreciation is given and tax is given. Ebitda is 18 crore. Now, what are the questions? Choose the most appropriate. What is the amount of interest to be allowed in the computation of total income of UI Limited? If there was interest in, if for AY 21-22, that means last year there was an interest expenditure disallowed under 94B. Whenever there is an interest expenditure disallowed, we carry forward up to a period of 8 years. That means current year we will have this 4.75 which will be subjected to the limit, this 4 crore which will be brought and the total will be subjected to the limit, and plus this 1.25 on which there will be no limit. 94B will be 30% of Ebitda. We already have Ebitda. Maximum deduction we will get this. So we will first adjust our current year 4.75 and then if we still have remaining space in that, we will adjust this. So we will come to know out of this how much is allowed, if anything from brought forward is allowed, and this 1.25 is going to anyways be fully allowed. What is going to be our interest? We have paid interest to associated enterprise 50 ka 9.5, 4.75 and plus brought forward is 4. So what is the total interest which will suffer 94B limit? Remember 1.25 out of 6 crore will not suffer. 4.75 and brought forward 4. So total interest is 8.75, but we get 94B mein maximum 30% of Ebitda which is 18. So 8.75 will be restricted to 5.4, in which this will get first preference. Then we will adjust brought forward. So we will get 5.4 from 94B and this 1.25 we will get total, and thus we will get 6 crore 65 lakh as our deduction of interest. 665 domestic full and 94B ka current year 4.75 plus brought forward 4 restricted to 30% of Ebitda. The transfer pricing adjustment for arm's length price, purchase price to be made in computation of total income would be what? See, matlab we are talking about the turbo equipment purchased. Normal 40 crore ka gross profit, 20% we should have shown 8 crore. That means our cost should have been maximum 32. If unrelated party hai, to cost is 32, but here our cost is 34.5. That means we have showed more cost. Sales is 40. Profit margin is 20%. So cost should be maximum 32, but we are showing cost 34.5 total cost, and that means we will have to disallow 2.5. What will be the transfer pricing adjustment? We will have to disallow 2.5. If UI repatriated the excess money on 31st March 23, means listen, not in 21-22, next year, please observe the date carefully, because once you miss the date, you will go wrong. 23, what will be the interest income that would be added to the total income of AY? They are asking for next year, PY 22-23, AY 23-24. If SBI's 1 year rending rate is 11.25 on 1/4/22 and 10.25 on 1/4/23, which AY they are asking? 22, which AY? 23-24. That means PY this. we have to take SBI lending rate on 1st April. So they have tested you on that also. 1st April of the previous year. We have to take the rate on 1st April of the previous year. So previous year is 22-23. So we are not interested in this. SBI rate will be this and plus 3.25. 1 year SBI rate on 1st April of previous year plus 3.25. So that will become 14.5%. This is the amount of primary adjustment that you have to do. Principal you get 14.5%, you know, and the primary adjustment was done suo motu on 30th November 22. On which date you did primary adjustment? 30th November. So you had to repatriate in 90 days from here, but you have repatriated on 31st March 23. That means interest will be calculated from 1st of December after this date. If it was AO's order, then from the next day of order. But if it is suo motu, then it will be from 1st of December till 31st March only we have to calculate. So this is our principal. Rate we will take 1st April 22 because they are asking PY 22-23. So that rate will be taken. Then domestic market may if we take SBI ka rate, so we will add 3.25. Forex may we add 3. Here we will add 3.25. And how will we get our answer? 2 crore 50 lakhs. 11.25 plus 3.25, 14.5%. December, January, February, March. December, January, February, March. That will give you interest of 12,01,712. That has to be added as per the notional interest rule of secondary adjustment. If UI Limited decides not to repatriate the excess money and instead pay the additional income tax on the entire, then what would be the additional income tax payable? The option is only one thing on the addition, transfer pricing addition. You pay 18%, compulsory surcharge 12% and compulsory cess 4%. So on 2.5 crore, we will be paying 18%, compulsory 12, compulsory 4. You will get 5241,600 as your liability that is going to be payable. 5241,600. Okay. If UI Limited decides to pay additional income tax on entire excess money on 15th March, matlab suno, we are not paying immediately. We are paying on 15th March. Should there be interest calculated? If so, what is the amount? Assuming that SBI ka 1 year marginal lending rate, again they have given 11.25 on 1/4/22. We are interested in carrying for AY 23-24. That means PY is 22-23. First day of PY, we will take this rate. This rate will not be taken. Isme bhi we will be adding 3.25. Matlab 14.5% on 2.5 crore. We will pay this, then we don't have to calculate interest. But till this date of payment, till this 15th March, matlab December, January, February, last time March ka we took 31 days, this time March ka we will take 15 days and 2.5 crore, 14.5%, December, January, February, March, and you will get 1042,808 as the interest that will be notional interest that will be added. In this case also notional interest will be added starting from the 1st of December ending on 15th March. So you have to pay additional income tax. That's a choice. Then no repatriation required, no notional interest. But till that date of payment, notional interest will be calculated. Ekdam deep mein you have been tested. In addition to the facts given in the case scenario, assuming that on 23rd August, UI Limited has entered into agreement of sale for Turbo with Y Limited, an Indian company which is not related. And Y Limited had already entered into an agreement on 21st August for sale of the same goods to K Incorporation, which is unrelated to Y, a UK entity whose place of effective management is also in UK, and UI Limited holds 28% voting power in O. UI Limited holds 28% voting power in K. Matlab first question, are UI and K associated? Very easy. Yes. UI and K are associated. Then there is a third company, Y. UI has got nothing to do with Y. Nothing to do with Y. Okay. UI is doing transaction with Y on 23rd August. Unrelated party. But before that transaction, Y and K have already, matlab I am indirectly doing a transaction with my associated enterprise. If I do a direct transaction, I will be treated as associated enterprise. Direct transaction ke case mein, I will be treated as associated enterprise. Yes or no? So what I do is, I first do an agreement between these two. my associated and a third party, and then I do just like we do in 94B indirectly. In this case, transaction with Y also will be treated as associated enterprise. Reason is our associated already has a contract with this. So when we are doing transaction with Y, we are basically indirectly doing transaction with our own associated enterprise. We are doing transaction with our own associated enterprise. In this case, K is the associated, Y also will be treated as associated. K and Y both will be treated as associated, and thus if we observe carefully, K and Y together are appearing only in the option C, and thus we have to choose C. And H we have already seen above, it is associated. Thus H, K and Y, all three will be decided as associated enterprise. Why is that way not associated? Please be clear. But does it have an advance contract? That means when I am dealing with Y, I am actually dealing with K. It's only a third party which is accommodating my transaction, and thus all three will be treated as associated. Next case study from 35 to 40. X Private Limited is an Indian company. Y Incorporation is a private company incorporated in USA, and income is not chargeable to tax in India. Both are promoted by Ayush, who holds 30% equity share in both X and Y. That means, can I say they are associated enterprise? And Y is non-resident associated enterprise. Okay. Balance sheet of X is given to us. So we have in millions, in millions they have given. So fixed asset, investment, cash bank. Millions means 10 lakh. 1 million is 10 lakh. So you multiply by 10 lakh, accordingly you will get. Okay. Then that is paid up capital loan. Loan taken from Y is 620. Non-resident associated enterprise 94B, and from others it is 180. And current liability is also given. The loan was advanced by Y to X on 1st July 21. That is balance sheet it is showing, but it was only a 9-month loan during the year. In rupee terms at 6.5% per annum. So can I say 620 million? This is in rupees. Million rupees. 620 million rupees at 6.5% per annum into 9 by 12 will be the interest that we will pay to Y. For borrowers with similar risk profile who are not associated, Y gives loan at 4%. Means Y gives to general people at 4, but to associated enterprise 6.5. That means, can I say it is more interest paid compared to market? That means we will give deduction maximum of 620 into 4% into 9 by 12. But assessee is claiming deduction of 620 into 6.5. We have to disallow 620 into 2.5 into 9 by 12. This expense of X will be disallowed, added back in X, because it is more interest than allowable market. X has maintained such information document in respect of international transaction as prescribed, but has not reported the transaction as an international transaction. So it becomes a case of misreporting, non-reported. X does not make any adjustment to total income on account of application of transfer pricing provision. That means he is not reporting the transaction. It becomes a clear case of misreporting. What are the questions that are being asked to us? Are X and Y associated enterprise? Are X and Y associated enterprise because Ayush holds voting power of 30% in both, because common person in both. So it has to be 26% of Ayush in both. So yes, X and Y will become associated because of when X and Y are associated as not less than 75% of X's loans have been availed from Y. That is not the criteria. Yes, X and Y are associated since loan advance to Y to X is not less than 51% of the book value of assets. So book value of assets agar aap dekhoge, and if you apply 51%, it is more than that. That is a criteria for making them associated enterprise, and no, they are not associated is wrong. So 1 and 3 is right. What is the amount of primary adjustment required to be done? That this we have done already over here. What will be the amount of primary adjustment? 2.5 crore, 620 millions into 2.5% for 9 by 12. This is given in millions. So when you convert this in decimals, you will get, be careful, in rupees term it will become 1.16 like that. So be very careful, it is given in millions. So it will become 1 crore 16 lakh 25,000. That will be the primary adjustment that we have to do. If X has accepted primary adjustment made by AO on 31st March 23, what should X do if does not want to treat the excess money as deemed advance and include the same in its total income? Then what is your option? If you don't want deemed notional income, option 1, repatriate the money within 90 days from the order of AO. Option 2, pay the one-time tax 18 plus 12 plus 4. What are our two options? Let's see. excess money which is available to Y has to be repatriated within 90 days from due date of filing return. No, that happens when it is suo motu. When it is order, then from 90 days of order. Excess money which is available to Y has to be repatriated 90 days from order. That's right. X has to pay additional income tax, but it is 2 or 3. You don't have to do both. That means you can do 2 or 3, any one. Interest has to be paid up to the payment of it. See, till the time you don't pay this, you will have to pay interest. Means either you pay notional interest ke upar tax, or you pay one time tax of 18 plus 12 plus 4, you will get 20.9664 till that date. Means if you are availing this option of paying the one time tax, then this interest will get attracted. So 3 and 4 will get together. Either you do 2 or you do 3 and 4 together. Either you do 2 or you do 3 and 4 together. If you do 3, you also have to do 4, or you can do 2 alone. So 2 or 3 and 4. It is like 182 or 60 and 365. It is like that. Correct? If X has accepted primary adjustment made by the assessing officer on 31st March 23, this is the date of exception, and not repatriated up to 31st March 24, what would be the consequence if it has not opted to pay? That means not repatriated also, not opted, that means notional interest will be added. Assuming that SBI ka rate is 10% on 1/4/23 and 11% on 1/4/24. They are asking you for previous year 23-24. That means you will have to take SBI rate on 1/4/23. Remember, first day of previous year. 1/4/23 plus in Indian currency it will be 3.25. That means we will be having notional interest calculation at 13.25%. What is the amount that will be added? That we have primary adjustment ka amount we already have in this question. On this amount, if not repatriated, we will be charging interest at 13.25%. Correct or no? So what is going to be that interest? This, which is in million, into 13.25%. When you will convert, this is million, no? So you have to multiply by 10 lakhs and you will get 15, 40, 313, and this will be for the full year because assessing officer ka order was passed on 31st March 23. So interest will start from the very first day, 1st April 23. Full year, so period we have not taken. 1,625,000 into 13.25 because this plus 3.25 and full year, and that will give you 15, 40, 313, 38 ka answer will be option C. Which factor is relevant in determining whether penalty under 270A of Income Tax Act will be leviable in respect of primary adjustment? Primary adjustment ka penalty kab levy hoga? 270A, when you have not reported the transaction, which is the case. X has not reported. The question has told you that X has not reported the transaction. So will it be a case of misreporting? Yes. X has maintained information. Wrong. Penalty is leviable. If AOTPO makes adjustment not being in accordance with arm's length right, penalty is leviable. 270A is not leviable on the basis of AO's adjustment. 270A is leviable if X is not reporting the transaction. Not reported, so X will be liable to have underreported 50 nahi. Transfer pricing ke case mein it will be a case of 200%, and therefore this penalty will be applicable. In the scenario given above, what would be the situation if on account of application of transfer pricing provisions, Indian company would have been lender and why the US company would have been the borrower and rate is 6.5%. Matlab this time Indian company is giving loan, other way around, transaction is changing. And Indian company is giving loan by showing interest. Last time it was expense, this time it is interest income in India. That's the change. Last time we borrowed, this time we are lending. And for borrowers with similar risk profile, we give 4%. That means unrelated ko we are showing 4% income, related ko we are showing 6.5%. This time, last time we were showing more expense, so we had to disallow. This time we are showing more income. And thus transfer pricing provision not applicable, and thus no adjustment is going to be required. No adjustment required. Understood? Deep mein test kiya. And the last case study 41 to 45, this will also complete our chapter. X Limited is an Indian company incorporated on 1 October 29 with the object of manufacturing medicine using state-of-art technology previously unused in India. One of the incidental business objects of X as per memorandum of association is trading in futures and options. So mitro, the moment you have another business, 115 BAB not available. BAB says only manufacturing, no other business. Only manufacturing, no other business. it commences, to hell with it, to hell with it. Now if it commences production, not commences production, 115 BAB not available because you have other business activity also. It commences production from its newly constructed manufacturing facility in Uttar Pradesh, registered office also is situated. Okay. Y Incorporation is a private company incorporated in forest jurisdiction. X holds 30% in nominal value of equity share capital. That means associated enterprise. Y lent an amount of 50 crore at 6% per annum to X on 1st April 21. So we will be paying interest at 6%, 3 crore rupees, which is more than 1 crore. So we will check 94B. X paid the interest due on 31st March 22. The transaction is at arm's length price as X has not availed any other. This is our only loan. That means, can I say 100% of our borrowings are from? Anyways, it is our associated enterprise. Profit before giving effect to interest, tax, depreciation for FY 21-22 is 6 crore. So our EBITDA is 6 crore. 30% of EBITDA, 1 crore 80 lakh. And we are showing interest of 3 crore. So maximum, and which is more than 1 crore. So we will restrict our deduction to 180 and 120 will be disallowed. This profit includes dividend of 750 received by X from Y. So Y is paying us dividend of 750. Foreign company paying dividend where we are holding 30%, 115B, B, D. Indian company getting dividend from foreign company with 26 or more holding, then this dividend, do you remember, will be taxable at 15%. It earned 2,50,000 from F&O trading also. So there is F&O profit also, there is 750 and then there is other income also, and that EBITDA is 6 crore. X has registered a patent in India for treatment of a novel virus. So finally coronavirus enters MCQ case study also, which it has developed in collaboration with Y. 90% of total expenditure for developing the patent has been incurred by X in its manufacturing facility in Uttar Pradesh, while remaining has been done outside India. Okay, so we have developed a new patent. X receives royalty of 5 crore by permitting other companies to use this patent. Total expenditure incurred is 42 lakhs. So on royalty we have expense also. On 1st January 22, Z Private Limited and engaged in an Indian company engaged in the same business gets amalgamated. So X and Z get amalgamated with each other. Immediately after approval of the scheme of amalgamation by the court, amalgamated company informs the AO of Z. Z ka AO. Z is now amalgamated with X as well as X. The amalgamated, the new company which is a merger of X and Z, informs the AO about amalgamation. However, both Z and X had filed their return of income for AY 21-22 separately within the time specified. See, amalgamation happened in the middle of the year. So both companies existed, they filed their return of income, but they merged, and after merger they informed the AO that we have merged. Okay, and they had already filed their return of income before the amalgamation is what they are within the time specified under 139, one before the order of amalgamation. So court ka order baad mein aaya, before that they filed their return. From the given information, choose the most appropriate answer. What would be the amount of disallowance of interest paid? We have already, I think, orally calculated. 6 crore ka 30%, 1.8 is maximum allowed. Actual interest is 50 ka 6. It is non-resident associate and enterprise. So we will disallow 1 crore 20 lakh. At what rate of tax will income of X from manufacturing business, dividend and F&O trading be taxed, assuming that X opts for the special provision introduced by Taxation Laws Amendment Act 2019, that is X is opting for new regime. अब if you opt for new regime, तो लोग क्या सोचता है मालूम है? Sir, manufacturing business 15. मित्रों, manufacturing business cannot go in 115 BAB the moment you have other business. That means 115 BAB you are disqualified. And if BAB you are disqualified, then new regime there is only one option, BAA. So BAA mein what is the rule? This business income will be taxed at 22%. F&O business income also will be taxed at 22%. But dividend from foreign company, if there is any special rate applicable, it will apply even in new regime. This will be taxed at 15%. So manufacturing business not eligible for BAB. So next best option is BAA 22, F&O 22. But special rate will apply. Special rate applies only even in new regime. So 22 will be for manufacturing, 15 for dividend, and 22 for F&O. 22. The only mistake which student will make is if they will end up choosing 15 for manufacturing, they will be wrong. Other business means BAA, BAB not allowed. So 22, 15 and 22. That is 22, 15 and 22. 22, 15 and 22. What is the tax rate for manufacturing business? 22%. What is the tax rate for manufacturing business? 22%. What is the tax rate for dividend? 15 and F&O also 22. So 22, 15 and 22 is going to be your answer. Which of the statement is correct as regards taxability of royalty? Taxability of royalty, 5 crore will be taxable at 15% is to wrong only under 115 BBF. 5 crore royalty is taxable at 10%. 4.5 at wrong, 115 BBF, no deduction of expense, not eligible for 115 BBF since entire 115 BBF required, you should be resident, true and first inventor, name written in your patent register. If that is fulfilled, you will be eligible for 10%. So 15 is not the answer, 10 है. 10 on gross, so 4.58 नहीं हो सकता. 10% on gross income of 5 crore. If X decides to avail the beneficial tax rate provided under the Taxation Law Amendment Act, मतलब new regime, it cannot claim additional depreciation as well as 80JJAA. 80JJAA, 80M, 80LA will be allowed. So wrong. It can claim deduction, additional depreciation as well as JJAA. No. Additional not allowed. Additional depreciation not allowed, 80JJAA. It can claim additional depreciation but not wrong. It cannot claim additional depreciation but it can claim 80JJAA. And the last question here, last question. The AO sought to undertake scrutiny of assessment of Z by issuing notice of 143.2 and 142.1 in the name of Z. Remember, Z has amalgamated with X and we have informed. Notices were served at the registered office of Z. Thereafter, proceedings were continued and assessment was made on Z. Knowingly, fully well, we have already informed both AOs that it is amalgamated. Which of the following statement is correct? This is a case law answer. It's a case law that when the company is amalgamated, the company is no longer in existence, then sending a notice to a company which is not in existence because it is already amalgamated and we have communicated that to you, then it is decided in a recent case law that the notices are invalid because they have been issued to a non-existing company. Because they have been issued to a non-existing company, the notices will be held to be declared to be invalid notices. Well, that was our chapter, transfer pricing, very heavy. But then this takes us to volume 3, where we will be having heads of income, salary, house, property. We will definitely complete today. And after completing that, we will try to complete at least another 100 questions in PGBP so that we can complete the remaining PGBP tomorrow. Okay. So servant allowance will be fully taxable. Helper allowance may you have a benefit. Servant allowance fully taxable. Rani Mukherjee is an actress employed in Yash Raj film. Well, she is paid monthly remuneration of 2 lakh. She acts in various films produced by various producers. Remuneration for acting in such films is directly paid to Yash Raj films by the producers. Then what she is getting, she is working as an employee. She is getting fixed monthly. So she will be having salary. Salary is taxable on due or receipt, whichever is earlier. Income tax paid by the employer on non-monetary perquisites on behalf of employee, in the hands of the employee, it will be exempt because employer does not get deduction. So employee ke liye it will be exempt. Mr. Bhavik, an employee, instructs his employer that he is not interested in receiving salary for December and may be donated. What will be the taxability? Salary foregone is also going to be taxable. Transport allowance granted to employees, what? Fully exempt, fully taxable? Exempt to the extent of amount notified. Exempt to the extent of amount notified. So normal employee 1600, handicapped employee 3200, and handicapped wala also allowed in new regime. Which of the following allowances are fully exempt? Allowances paid to citizen of India outside India by government. So government employees working outside, allowance is exempt. High court judges, UNO employees, all these allowances are going to be exempt. State whether true or false. Gratuity received from 2 or more employers, then the total cannot exceed 20 lakh. Absolutely true. Total cannot exceed 20 lakh. That's the maximum notified over life. Children education allowance ka exemption is going to be up to 100 rupees per month per child. Education allowance ka 100 hai. Hostel allowance ka 300 hai. Exemption in case of leave salary received at the time of retirement to non-government. So during service is taxable. Retirement government is exempt. Retirement non-government is list of 3 lakh actual amount. Balance leave into your salary or 10 months ka average salary. 10 into salary is one of your limits. Any allowance for encouraging academic research and training pursuits and educational research by provided by the employer to the employee is going to be fully exempt because sorry, my bad. Any allowance which is provided any allowance which is provided by the employer to the employee, if it is a training or refresher course, then in that case, if it is helping the employee, that's a different thing. But here he is not giving to you in the form of perquisite, he is giving to you in the form of allowance. And whenever he is giving you academic pursuit allowance, we call it academic pursuit allowance, uske liye the rule is the exemption will be equal to the amount spent. So difference hai, I just missed this word allowance, I apologize for that. Agar employer itself is giving you the training and refresher course, so under perquisite that is exempt. But employer is giving you money for academic pursuit, so whatever you spend will be exempt up to the amount that is spent. On retirement, receipt of accumulated balance of RPF will be exempt only if the employee has spent, very easy, 5 years. Amount of contribution to an approved superannuation fund by employer with respect to assessee is exempt up to approved superannuation fund 1,50,000. A fund constituted under employees provident fund, that means EPF Act. EPF Act के अंडर जो fund होता है, that is called recognized provident fund. Compensation on account of termination of employment and compensation on account of modification of terms of employment. Whenever there is any termination or modification, if you receive any compensation, that will be taxable. Interest credited on the account of employee statutory provident fund, government employee is going to be fully exempt. Interest free loan will not be regarded as perquisite if the loan given is up to rupees 20,000. Loan up to 20,000 not a perquisite. What is standard deduction of salary? Of course, actual salary or 50,000, but here in option they have given 50, so we have to take that. Medical facilities provided by employer is fully taxable except, what are the cases where we get exemption? Employer hospital, government hospital, approved hospital, recommended hospital, correct or no? So fully taxable except when? Employer hospital, government hospital, that means in these two cases it is going to be fully exempt. Contribution to which of the following funds by employees is not eligible for deduction? The only fund which is not eligible is unrecognized provident. Deduction of entertainment allowance is allowed only to, as we are aware, government employees. Mr. Amit is an employee of Reliance, he gets subsidized lunch at 25 per plate, market value is 50. What is the taxable value? Say up to 50 rupees anyways exempt. More than 50, then we subtract this amount. So supposingly the value of lunch was 200, then we would have said 200 minus 50 exempt and 25 recovered for the exempt. But here the value is only up to 50, so it is going to be exempt. For the purpose of determining the perquisite value of loan at concessional rate given to the employee, lending rate of SBI on the first day of the relevant previous year. Maximum ceiling limit for gratuity in respect of employees covered by POGA is going to be 20 lakh. HRA paid to an employee residing in Indore is exempt up to lower of actual HRA, excess of rent paid over 10% of salary, or third, whenever your house is in metro cities, what is going to be the limit? 50% of salary, and whenever the house is in non-metro cities, what is going to be the limit? 40% of salary. When they are talking about Indore, then the third limit will be 40%. So actual rent paid minus 10% of salary, and third limit will be 40%. Mr. Ganesh, a citizen of India, is employed in Indian Embassy in USA. He is non-resident for AY 22-23. He received salary and allowances in USA from Government of India for year ended 31st March 22 for services rendered by him in the USA. In addition, he was allowed perquisites by the government. Which of the following statements are correct? Whenever Government of India is paying salary outside India to government employees, they may be deputed for some embassy related work. Salary will be treated as due in India and taxable. Allowance perquisite will be exempt. Salary will be taxable. Allowance perquisite will be exempt. Salary allowance perquisite exempt, wrong. Salary allowance perquisite taxable, wrong. Salary is taxable, allowance perquisite exempt. क्या बोला? Salary is taxable, allowance perquisite will be exempt. That's our chapter, income from salary. Next, income from house property. Annual value of house property being held as stock in trade would be treated as nil for a period of how many years? Stock in trade can be treated as annual value 0 up to a period of 2 years. Prakash, a salaried individual, has vacant land which is given on rent by him. Rental income received by Prakash is taxable. See, if it is vacant land, it cannot be house property. It is of course not capital gain, it's rent, not sale. Options are PGBP, IFRS, regular activity PGBP, but he is salaried individual, so this is also not possible, and thus the only option is IFRS. ABC, a partnership firm according to deed engaged in the business of letting out of properties. Rental income received from letting out of property will be chargeable under which act? See, normally rent is always taxed under house property, house property, house property, house property. But we have a Supreme Court judgment, Chennai Properties and Investment, under which it is held that if that's your main business, that's your activity as per your memorandum or as per your partnership deed, then you can offer it under PGBP. Raman, a salaried individual, received composite rent for building and furniture from Raghavan. Raghavan does not accept the letting without other assets. Matlab composite rent hai. Separate not possible. If separate not possible, matlab house property can. If you can separate, then only house property, otherwise no. It's not capital gain and he is salaried individual, that means PGBP not applicable. So IFOS. Mr. Rayat contractor has let out his property to Husaina, which is used by Husaina for her commercial purpose. Husaina paid 10 lakh as rent. Now 10 lakh is taxable in which head? Section 22. It says income from house property, and in the section they write income from property of any kind, residential or commercial. In other words, this will also be taxable under house property. For calculating annual value, how annual letting value, what do we take? Municipal valuation or fair rent, whichever is higher compared to standard rent, whichever is lower. So higher of fair rent and municipal value, but restricted to standard rent. पहले ही option में. Ms. Pallavi has let out own property from 1st April 21 to 30 November 21 and received rent of 72,000. 72,000 is the rent received by her. From 1/12/21 to 31st March, she occupied the property herself. Other information is you have municipal valuation, fair rent, standard rent, municipal taxes. Calculate NAV. See, municipal valuation or fair rent, whichever is higher compared with standard rent, whichever is lower, that means standard rent is going to be your ALV. Compare with actual rent is 72,000. There is no vacancy because SOP period is not counted in vacancy. So 75 or 72, whichever is higher, your GAV will be equal to 75,000, and from this municipal tax is 7950. If you minus 7950, if you minus, then you will get your 67050 as your net annual value. This is SOP period, so we will take only 72 and 75, whichever is higher. For computation of income from house property, what is annual letting value? Expected rent, and expected rent is what? Municipal valuation or fair rent, whichever is higher, but that expected rent or standard rent, whichever is lower. Correct or no? So what is annual letting value? Expected rent or standard rent, whichever is lower. For computation of GAV, fair value, municipal value and standard rent has to be apportioned when the property is let out for some part of a year. No, you have to take full year. When a portion of property, when they are divisible units, at that time you will have to apportion, half SOP, half LOP. If a single unit of property is self-occupied for part of a year and let out for rest of it, single unit, not multiple units, then we will take the period of whole year. If it is divisible, then we segregate. Single unit, if let out even for one day, it will be treated as LOP. What is the amount of standard deduction? 24A is standard deduction, 30%. So 3 by 10 is 30%. ऐसा fraction देख के डरने का नहीं. 3 by 10 is only 30%. So 30% of annual value. Unrealized rent should be reduced from actual rent. Which is the condition? Tenancy is bona fide, vacated the property, not occupying other property, all reasonable steps. Yes, you have to fulfill all the conditions. Deduction of which of the following is allowed while computing income from house property? Repairs, maintenance, construction? No. Only standard deduction, interest and municipal tax from GAV. Pre-construction interest can be claimed as a deduction over how many years? Pre-construction over a period of 5 years. Municipal taxes will be deducted from GAV only when incurred, paid by owner, paid by tenant or owner. Only if paid and paid by the owner. Whether house property is co-owned by 2 owners and self-occupied, overall aggregate 2 lakh interest will be allowed. If there are 2 co-owners, every individual assessee will get 2 lakh ka limit. So aggregate ka 2 lakh nahi, individual. One person has 2 SOPs, total will be restricted to 2 lakh. 2 different owners, then individually they will get 2 lakh. When loan is taken for repair, renewal or reconstruction of house property in case of SOP, LOP no maximum limit, but SOP maximum is 30. 2 lakh is allowed only if purchase or construction after 1499 construction completed within 5 years. So if it is repair, renewal, reconstruction, you will get maximum 30,000. Shahrukh transferred his property to his wife in agreement to live apart without consideration. Then who will be the owner? If they are living together, then the deemed owner concept will apply. But if they are separating, matlab this transfer was not done for evasion, it was done for peace of mind. And thus, who will be treated as owner? Shahrukh's wife will only be treated as owner. Karan received unrealized rent of 50,000 on 5th June 21 in respect of property held by him. In this year, he was not the owner. Then what will happen? See, unrealized rent recovered is taxable in the year of recovery even if you are not the owner, but not the full amount. You get standard deduction. So we will have income from house property with standard deduction only 70%. 35,000 will be taxable. Pankaj let out his property and received 132. That's actual rent. Municipal valuation, fair rent is given, standard rent is given. Pankaj took a loan for acquisition of property from Singapore and paid 40,000 without TDS, so interest not allowed. Compute the income from house property. Municipal tax is accrued 13 but paid 10, so 13 also not relevant. 13 ka deduction nahi, 10 ka you will get and 40 you will not get because without TDS. That means they have given you all the information. Municipal valuation or fair rent, whichever is higher, fair rent or standard rent, whichever is lower. This ALV or 132 may say you subtract this municipal tax is only the paid amount. So 122 gives standard deduction, interest will not be allowed. I think I have solved this question already for you. So ALV, municipal valuation or fair rent, whichever is higher, subject to standard rate. You get this, actual is 132. So whichever is higher, ALV or actual, whichever is higher, municipal tax is minus. So NAV 122, standard deduction, and interest you will not be allowed, 85,400, which is given to you in option C. When an assessee has two house properties for self-occupation, the benefit of nil annual value will be available for both properties, which has been first, any of the properties, two house properties may you can take. Both Alia Bhatt and Vicky Kaushal are co-owners of self-occupied property. They own 50% share each. Interest paid by each co-owner on loan taken for acquisition of property during 2006. So construction on or after 1/4/1999 is 2 lakh. What will be the amount allowable in respect of each co-owner? It is SOP. So maximum 205. Both of them are paying 2 lakh. Will the total maximum 2 lakh? Will the total be restricted? No. Both of them will individually get their 2 lakh ka limit. So Alia Bhatt is paying 205. Okay. And Vicky Kaushal is paying 205. Both of them will get separate deduction. 205. But it is SOP. So restricted to 2 lakh. Alia 2 lakh and Vicky Kaushal 2 lakh. So each co-owner will get deduction of 2 lakh. Satya received 90,000 in May 21 towards recovery of unrealized rent, which was deducted from actual rent previous year 2021 for determining ALV. Legal expense is 20,000. What will be the amount taxable? Legal expense irrelevant. Recovery minus 30% standard deduction. So 27,000 and 63 is going to be taxable. Person who acquired any right in respect of building or transfer for lease of not less than how many years will be deemed owner? If the lease period is 12 years or more, then the deemed ownership concept of house property is applicable. Lease period of 12 years or more. The maximum limit on interest deduction under let out property. Let out property, there is absolutely no limit. Limit is in SOP. Treatment of unrealized rent is what? We will have to deduct it from our actual rent. Deduction under 24B. So interest ka deduction is going to be the interest due. Municipal taxes payment basis, interest on due basis. X Limited is engaged in the business of letting out of properties as per Memorandum of Association of X Limited. Letting out of properties is the main objective. मतलब चेन्नई properties का case law Supreme Court का applicable, it can offer PGBP. Total income of X Limited comprises only of this income. That means definitely X will offer income under PGBP. Y Limited is engaged in construction and sale of properties, which is also main. मतलब Y Limited is a developer. Main objective is construction. As per memorandum, incidentally, it let out some of the properties which are held as stock in trade and earns rental income. If it is just one of your incomes, then it will go in IFHP. Matlab the one which has got only income rent, that will offer as PGBP. But if rent is one of your incomes, then it will go in house property. So X के लिए PGBP, Y के लिए house property. X and Y house property wrong. X and Y PGBP wrong. For X under house property, Y under PGBP wrong. Y के लिए house property and X के लिए PGBP right. That's your correct answer. And now our great institute gives a case study on house property chapter, ladies and gentlemen. And what a complicated case study. Detailed provision is going to be tested. And we have incorporated the full case study digested. So we will not leave this also. Case study having last 5 questions, house property will get over. We move on to PGBP. 2.5 hours you will have to be prepared. My target is minimum 100 questions of PGBP. So I will leave you at 100 questions of PGBP today, because anyways PGBP 1 lecture I cannot complete. 100 questions of PGBP or 2.5 hours, whichever is later. If I first complete 100 questions but I don't complete 2.5 hours, I will continue. And if I first complete 2.5 hours but I don't complete 100 questions, I will continue, whichever is later. Pehle house property. Mr. Billabong stays in India from April to September and in UK from October to March every year. April to September he is in India. He owns a house in London which he has let out at £1,000 per month, and he pays taxes of £100 levied by local authority of London, and they have given you the exchange rate also. They have given you the exchange rate. Okay. So 6 months he is in India, April to September, and that will make it, you can check if it is coming to 182 days or no. That will come to 183 days. He is a resident. That means London ka rental income, and London ka jo property, it is a let out property. Let out property matlab we don't have to use our brain. And they have given you actual rent, municipal tax, we will count, we have the exchange rate also, we will give standard deduction, we can compute income from LOP using this data. Mr. Billabong also has a flat as Winchester, and one more city, UK only. So UK mein, in London also he has property Winchester, where he stays. So he goes no October to March, he stays. And it is unoccupied, means can I say not let out? And he has paid municipal tax of £5,000 in respect of the said house property. Matlab till now he has one SOP, one LOP. Okay. He owns the following house properties in Mumbai. Bandra unoccupied, Worli unoccupied. Both of them are unoccupied properties, and they have given municipal tax. So whether you take them as SOP or no, municipal tax will be incurred. SOP mein I know we don't get deduction because directly we start with NAV 0. But suno, 1 SOP, 2 SOP, 3 SOP, maximum 2 will be allowed. We will check GAV of Winchester, GAV of Bandra, GAV of Worli. The top 2 we will take as SOP. The third we will take as DLOP. And if we take as DLOP, then we have to give the deduction of municipal tax. And of course, this municipal tax, this is LOP. So this is out of our discussion. LOP, though clear. The remaining 3 houses, 2 will be SOP, 1 will be DLOP. Other details relating to the properties are. So Bandra ka they have given standard rent, municipal value, fair rent. Worli ke liye bhi they have given you. For Winchester and London, they can give you only the fair rent because municipal valuation and standard rent may not be applicable over there. So this will help us in computation. See, listen, out of this, this is LOP. In these 3, 1 will be DLOP. So 2 SOP, 1 DLOP, 1 LOP. Full chapter cover. Welcome to case study MCQs. In April 21, Mr. Billabong's father, Mr. Hong Kong, who is 61 years old and resident senior citizen, has sold a flat owned by him for last 5 years. So he had a flat for 5 years. So long-term capital gain he has sold to his neighbor who is 70 years old for 3 crore rupees, which resulted in gain of 2 crore. So 3 crore is the selling price. Index cost will be 1 crore because it is long-term, and 2 crore is the gain amount, capital gain amount. He decided to immediately invest the sale proceeds received from flat in these deposits of Mahindra and Mahindra to the tune of 1.35 crore to earn high rate of return. 20 lakh rupees in NHAI bonds, so against house 54 EC, 15 lakh in GSEC means government securities, 30 lakh in bonds of RECL. So NHAI RECL together is 50. All investments are made by him in June 21. When did he sell his house? April. He has invested in June. Is it within 6 months? Yes. So eligible, but not of the debt that he has purchased or the government securities, only NHAI RECL bonds. In March 22, so from April 21, March 22, within the 2 years time limit, which is available in 54, he purchased 2 adjacent apartments in Pune for 50 lakh each and made suitable modifications to use them as a single house. Means he has also invested in 54 and the 2 houses are next to each other. That means they will be counted as 1 and 50 full 1 crore. That means we will get 54 EC, 20 plus 30, 50 lakh benefit, and we will get these 2 units will be counted as 1 house. So 50, 1 crore, 1 crore 50 lakh benefit. Okay. And a flat in Baroda for 40 lakhs in April 22. Now, we know that 1 house is allowed. These 2 will be counted as 1 house. So, we will allow that full 50, 1 crore. 2 units, 50, 1 crore. But if the capital gain is up to rupees 2 crore, you can take 2 houses. Means the 2 units in Pune will be counted as 1 house. 1 crore rupees. Second house in Baroda. Because capital gain is up to 2 crore. So, that 40 and both are within the time limit of 2 years. So, 1 crore 40 lakh ka exemption will be allowed in 54 and 50 lakhs ka, we think 30 plus 20 RECL and NHAI RECL together 20 and 30 50 lakh. Further, he has received other income from various sources. So, he has interest on FD, commission and rent. From the information given above, choose the most appropriate answer to answer the following questions. Assuming Billabong doesn't opt for 115 BAC. See, that is required. Because if he opts for 115 BAC, then SOP ke andar interest and all will not be allowed. Anyways, interest is not given only in this question. But in case, okay. What is the amount of municipal taxes allowable as deduction from GAV? Listen, you will think that these three are self-occupied property, Winchester, Worli, Bandra. So only London ka municipal tax because it is LOP. No, mitro. Out of the three houses, now you have to identify which one is DLOP. Three SOPs, no. So two will be SOP, one will be DLOP. In that DLOP, there will be municipal tax. So it may be this house, or it may be Winchester ka 5,000. We don't know no, which one is DLOP. That plus London ka 100. That total will be allowed. So we have to first find out. London ka to we will get full. 100 pounds we are paying, no? 100 pounds we are paying in London. So 100 pounds ka 120 ke hisab se will get 12,000. And now for the remaining three properties. Municipal valuation, Bandra, Worli, Winchester, municipal valuation and all that is not given. Only fair rent will be given. So directly we will take that fair rent as the ALV. Your municipal valuation is given, fair rent is given, and of course they have given monthly figures. 60,000, 50,000, 140, 130. I have multiplied. So municipal valuation, fair rent, expected rent will be higher. Standard rent is also given. 70,000, 120. That is also given. So ALV here is 720, ALV here is 1680, and ALV here is 2880. So we have three properties, 1680, 2880 and 720. These two will be taken as SOP. This will become DLOP. So Bandra property ka municipal taxes will also be allowed. So 10,000 from Bandra and 12,000 from London. Total deduction of 22,000. What will be the municipal taxes that will be allowed? The total deduction will be 22,000. So first you have to identify your DLOP. That plus London, which is LOP. What is the income chargeable under the head income from house property of Billabong for AY 22-23? So question 29 will help you in question 30. What is income from house property? These two will to go away as SOP and there is no interest. So 0, 0. Here we have to take 720 and London ka. So we have to only take London and Bandra. London and Bandra we have already decided. This LOP, this DLOP, this LOP, DLOP. So London and Bandra. Okay. First for Bandra. GAV is 720 because ALV only will become GAV. Municipal taxes ka this 10,000 ka deduction we are getting here. NAV, you get standard deduction 497 will be income of Bandra. And London. London ka rent is 1,000 pound. But we will have to take this because ALV or actual whichever is higher. So we will take 2,000 pounds. 24,000. 100 ka we will get deduction municipal tax. So 23,900. All this is in pound. Standard deduction. You can compute all amount in rupees. You will have to multiply everything with 120. It is the same thing. Or you just multiply the final amount with 120. So you will get 20,07,600. So London, which is LOP, 20,07,600, and your Bandra, which is DLOP, 497. The total will be 25,04,600. 25,04,600. That total will be your income from house property. Suppose the house property in Winchester is sold on 1st April. Then what will be house property income? Means listen, this Winchester property is sold. Now I don't have this property. This property is gone. Then what will be my income from house property? Then you will say, sir, what we will do is, if Winchester is gone, then this will be our SOP and Bandra London ka total again. No mitro, no mitro. If this property is gone, Winchester, then Bandra and Worli both will become SOP. So Bandra and Worli ka income will go away. Winchester is gone. Bandra, Worli gone. So the only property income that we will have is the property from London, that is the property from London. Bandra and Worli will become SOP. London ka property 20,07,600. Arey London mein you don't have option. Now it is let out. You have to take that. Okay. So only this DLOP will go away because it has become SOP. What is the amount of capital gain chargeable for his father? Father ka capital gain was 2 crore, but we gave some exemptions. So what is the capital gain? 2 crore. NHA RECL ka total 50 lakh. Adjacent units in Pune will be counted as 1. So 50 lakh, 1 crore. And capital gain is up to 2 crore. So second house also allowed 40 lakh. So this finally taxable capital gain will become 10 lakh rupees. Taxable capital gain 10 lakh rupees. And what is the amount of tax which would have been deducted in respect of his father? Means what TDS father will suffer. Let's see. On this 3 crore there will be 1% TDS because immovable property of 50 lakh or more. So 3 lakh rupees. FD interest के ऊपर will there be TDS? Senior citizen, resident, therefore there will be no TDS. 194A का senior citizen का limit is 50. क्या क्या test कर रहा है? Will there be TDS on this 40? No. Commission is more than 15,000. They are checking your knowledge of 194H. इसके अंदर it is less than 50, no TDS. This is more than 50, so there will be 5% TDS on this. And rent is less than 2,40,000. So only this 3 crore and only this 20,000 will have TDS. 3 crore के ऊपर 1% under 194 IA 3 lakh and 20,000 का 5% 194H 301. Why there will be no TDS on interest? Because less than 50, no TDS on rent because less than 240. So 3 lakh 1,000 is going to be the TDS that will be suffered by the father, and that, ladies and gentlemen, is your big case study of house property. That's our chapter, income from house property. Alright, then let's go to that chapter where we have maximum questions. If I have to give you a number, I have got 360 questions for you in profits and gains of business or profession. All the case studies, big questions, small questions, plenty of them. All case studies, 100% coverage. For MCQs, I strongly believe that you will not be required to go anywhere beyond our material to secure your marks. So let's go PGBP, but just this requirement and take the easy questions also seriously. Okay. Method of accounting to be employed for computation of PGBP, cash or mercantile? Assessee's choice. Which of the following is not profit for taxability under section 28? Profit in kind, you have to pay tax if you get PGBP income in kind. Illegal also you have to pay tax. Voluntarily you have to pay tax only. Capital receipt will not come. Government has notified how many ICDs? There are 10 ICDs, 10 ICDs that have been notified by central government. Kailash operated strawberry shop during winter season for 3 months. It is not a continuous venture. During 3 months, he earned 5 lakh and expense of 1 lakh. The income will be taxable under PGBP. So, what if it does not go for the full year? Ultimately, it is his business. Kirti started a small venture of selling ice creams. Though started by Kirti, business is fully carried on by her brother Rakesh under her directions and control. So, the brother is only an employee. Who will pay tax on the profits? Obviously, Kirti. In which of the following circumstances ICDS is applicable? Cash system, not applicable. Individual not required to get his accounts audited, not applicable. ICDS is applicable only if you are covered under 44. PGBP or IFOS under accrual system of accounting. And of course, books of accounts ke liye nothing. Computation of income ke liye. Mr. C is required to get his accounts audited under 44AB, followed cash system of accounting, whether ICDS is applicable. No. ICDS 1 accounting policies does not recognize. The main difference between ICDS and accounting standard is ICDS does not recognize the principle of conservatism, that is prudence. ICDS 2 deals, inventories deals with raw material, finished good, everything. If there is a conflict between ICDS and income tax provision, whenever the ICDS conflicts with income tax provision will be superior. ICDS versus case law, ICDS is superior, but versus act, then income tax act. ICDS 2 valuation of inventory requires inventory to be valued at cost or NRV, whichever is lower. State whether true or false. As per ICDS 1, treatment and presentation has to be governed by legal form and not substance. Rather, it is substance over form. ICDS recognizes, which ICDS recognizes income earned by giving its resources yielding interest, royalty or dividend. So basically they are asking us ICDS number. ICDS on revenue recognition is covered in ICDS 4. ICDS 3 construction contract is applicable obviously to the contractor. Why will it apply to the contractor? Mr. Hirachand is in agency business where he is a real estate broker. For him, as per ICDS 4, what will be the revenue? Will it be the revenue that the two parties transact with each other? No, I get only a share. So my revenue will be only the amount written by me. CA Sonal Surana, scared of her, conducted audit for 65 days at a client place. How will the revenue be recognized by her? She follows cash system of accounting. When the assessee follows cash system of accounting, ICDS is not applicable. If it was accrual, Then we could have done percentage of completion method. If it is less than 60, say if it is less than 90 days, then you can take it as project completion method. You know your multiple options, but here let's be clear. Cash system ICDS not applicable. Mr. Mayank Chabria started his contract work on 31st December 15, but was not able to complete up to this date. So the rule is that if the contract had already started before the year when ICDS came, ICDS became applicable from 16-17. If the contract had already started, you can continue your old method. For new contracts, you have to follow the ICDS. So method regularly followed prior can be continued. ICDS for revenue recognition requires disclosure of amount of revenue from service, method used to determine stage of completion, information relating to service transaction in progress, all of the above. Tangible fixed asset does not require disclosure, of number of asset is irrelevant. We are interested in the WDV, we are interested in the gross block, the net block, but number of assets not required. Foreign currency monetary items shall be converted into reporting currency by applying the closing rate. Monetary items are always converted at the closing rate. It is similar to accounting. Monetary items we apply the closing rate. What are the types of government grants which are covered in ICDS 7? Subsidies, cash incentives, duty drawback. All of this is government grant. When an asset is acquired in exchange of another asset, the value of asset acquired should be at the fair value of the acquired asset. It's like barter, what you follow in capital gain also. Asset exchange. So what will you take? The fair value of the asset received. As per ICDS 7, government grants related to depreciable fixed asset shall be reduced from the cost of the asset. So if the government grant gives you specifically with respect to an asset, we will reduce from cost. ICDS 8 securities, we have to do actual cost or NRV, whichever is lower, but not individual script. We have to do total cost of equity shares, total NRV, total cost of preference share, total NRV. It has to be done category wise, which will be explained in this next example. Mr. Gandhi acquired ABCD shares, value of this as per ICDS. So if you go by script wise, then you will choose whichever is lower year. No, you have to take the total and the total. So what is the total of cost and what is the total of the NRV? You have to see for the entire category. Total cost 100, 120, 220, 220 and 140, 360, 360 and 200, 560, 75 and 150, 225, 225 and 120, 345, 345 and 535. So 535 or 560, whichever is lower. 25 ka answer. When a security is acquired in exchange of another security, value of the acquired security, same, fair value of the security that you have acquired. So just like asset, the value of the asset received. When actual cost initially recognized cannot be ascertained by reference to specific identification, which of the following methods shall be used for subsequent measurement? If actual cost is not possible, then the only option left is FIFO or weighted average. You can follow any one of them, but LIFO is not allowed. At the end of previous year, listed securities held as stock in trade have to be valued at. Listed securities के लिए the rule is cost or NRV, whichever is lower. What is the ICDS valuation rule for securities held as stock in trade? Listed at cost or NRV, whichever is lower. Unlisted at cost. That's the rule in the ICDS. Unlisted at cost and listed at cost or NRV, whichever is lower. ICDS 10 requires recognition of provision, not contingent asset or liability. Provision of ICDS are applicable for whom? For computation of income under PGBP and IFRS. Yes, not for MAT, not for books of accounts. For computation of income under PGBP and IFRS. Which of the following is not dealt by ICDS 9 borrowing? Not dealt. Treatment of actual or imputed cost of owner's equity and preference. Equity and preference capital ना वो dividend में जाता है. That is not interest, and borrowing cost is interest. बाकी specific borrowing cost, general borrowing cost, formula for capitalization, when will it commence, everything is dealt, but dividend will of course not be dealt in borrowing cost. As per ICDS 9, borrowing cost qualifying asset is an asset. For borrowing cost qualifying asset is an asset which requires a period of at least 12 months for its acquisition, construction and production. So minimum requirement will be 12 months for it to become borrowing cost. State whether the following statement is true or false. ICDS will apply only if the assessee follows Ind AS. Rubbish. For PGBP and IFOS, if you follow accrual method of accounting. Provision for post-employment benefits will be done as per which there is no ICDS for employee benefit. There may be an accounting standard, but for this there is no ICDS. Which ICDS is applicable on recognizing revenue from construction project? Normal revenue recognition is in 4, but construction falls in ICDS 3. What are the forms? What are the disclosures under? Sorry, where are the disclosures under ICDS to be made? ICDS ka all disclosures have to be made in the tax audit report by the CA. Interest of 50,000 is eligible for capitalization as per ICDS 9. In this interest, 15,000 is disallowed in 40, maybe because TDS was not deducted or any of the reasons. What will be the amount of capitalization? If 15,000 is disallowed, that means we will capitalize only 35,000. Unlisted securities should be valued at what? Unlisted will be valued at cost. Listed cost or NRV, whichever is lower, but unlisted at cost. Mr. Vaibhav sold debentures on 30th April 21 for 60,000, which he acquired on 26th June 18 for 40,000. And interest payment is on 30th June. But interest on accrual basis of 1250 has been accounted as income. Then what will be the amount of capital gains? His selling price is 60,000. His cost price is going to be 40,000. But please understand karne ka koshish kijiye that he has already recognized 1250 as income. Already he has recognized 1250 as income. So when he is basically going to get money from his sales, the person who is buying the debenture will actually receive interest, because when am I selling? 30th April. And interest will come in 30th June. That means, can I say the new owner of debenture, the buyer of debenture will receive interest? But I have already paid tax on that interest. That means from that buyer, I will also charge 1250 extra. 60 he is paying me for the debenture. But there is interest which should come to me. I have accounted for it on 31st March, but he will get it because the payment of the company का fixed date होता है debenture payment का, and on that date I have sold him. So basically the buyer should pay me 1250 extra, but in case our buyer does not pay me, logically speaking, I am trying to explain the logic. I am going to get 60,000 from the buyer, and I have paid a cost of 40,000. Let me explain like this. What's the gain? 20,000 is my gain, because this is my selling price, this is my cost price. Selling price, cost price. 20 is my total gain. But out of this 20, there is interest of 1250, which will be given to the new owner. But I have already offered that interest of 1250 to tax. And thus in capital gain, now I will offer only the balance amount of 18,750. Let me explain start to finish again. Selling price of debenture is 60. Cost is 40. Pocket gain for Mr. Vaibhav is 20. But in that 20, he has already paid tax on due basis on such interest which he is not going to get also. That is going to get to the new owner, because payment by the company ka date is 30th June. But I have already paid tax. So now I will offer in capital gain only 18,750. Which of the following is not taxable? Which of the following is not taxable under PGBP? Profit on sale of import entitlement related to business. So taxable hai. Custom duty drawback, taxable. Salary of MP, MLA, this goes under IFOS. So it will not be taxable under PGBP. An association of person also taxable. In a partnership firm, Ravish is one of the partners whose capital is 1 lakh in the firm. Firm gave interest on capital 30%, and thus Ravish, of course, 30% will receive 30. Firm ko deduction kitna milega? Only 12. So Ravish will pay tax only on 12%, 40 B ka limit. Ravish will pay tax only on 12 as business income, and the remaining 18 will be exempt. Hashruti is a proprietor of Suksagar business, entered into contract with Shama to deliver the goods within 3 months. Shama modified the terms and stated that she will deliver the goods within 9 months and not within 3 months. And due to this, Hashruti received compensation of 50,000 from Shama. Whenever you receive compensation for modification of any terms of business, you will be getting PGBP income. If it is related to employment, it will go in salary. But this is related to business, so PGBP. Any sum received on account of transfer of right to carry on any business or profession. If I am transferring my right to carry on business, okay, that means I am indirectly, you can say, selling my business only. Then it becomes an income which will be taxable under capital gain. Interest received by partner of firm from firm will be deemed to be income from business. Partnership se partner ko kuch bhi mila, so it will be taxable under business. Which of the following is not allowed as a deduction under section? Not allowed. Cess or taxes levied by foreign government with respect to premises, rent, trade, taxes, repairs and insurance. They used for business. Allowed. They are asking what is not allowed. Rent paid to owner, of course it will be allowed. Insurance with respect to building is also allowed, but capital repairs not allowed because you can take depreciation. Section 32 will apply. Which of the following is speculation business? Hedging contract, forward contract, purchase or sale of shares without actual delivery. These are not speculation transactions. These are normal business transactions. When an inventory is converted into capital asset, stock in trade converted into capital asset, what of inventory on date of conversion would be chargeable? Fair market value on the date of conversion. In order to claim deduction under section 31 for repairs of plant, usage of plant can be, can I say active use, passive use, both will get covered. If assessee is the owner of premises and occupies them for business purpose, then notional rent will not be allowed. Khud ka premises pe you cannot take notional rent. So notional rent will be allowed. Wrong. Will be capitalized. Wrong. Notional rent will not be allowed. Mukesh incurred loss of 50,000 while trading in agriculture commodity derivatives on a recognized stock exchange when CTT is not paid. So listen, derivative trading is treated as normal business if you pay CTT. If you don't pay CTT, then it will become speculation. So in order for your derivative transaction to not be speculation, CTT has to be paid. But you have not paid CTT. So mind bolega this is speculation, but agriculture commodities are excluded from that. Matlab normally, if you pay CTT, then only it is normal business, otherwise it is speculation. But for agriculture commodity, without CTT also, it will be treated as normal business income. It will not be treated as speculation income. Which of the following asset depreciation is not allowed? Easiest of all. Depreciation is allowed on plant. Plant does not include what? Books included, engine included, but animal not. Animal ka allowance you get in the year of sale of dead body. In a business, plant is used only 3 months. Total expense on repairs made during the year is 12. So what deduction you? See, सुनो, ऐसा नहीं है कि बाकी के period के लिए you are using it for personal use. Maybe business is seasonal. Once we incur expense for business, we will get deduction unless the question tells us that a portion was personal. Otherwise, whether we use it for 3 months or full year, we are using it for business, we will get deduction of repairs. AB Limited earned a profit of 12 lakh before depreciation, and as it does not want to deduct it from profit, depreciation is 80,000. What will be the taxable income? Depreciation ka deduction, same as set off of losses, is not optional. If it is eligible, you have to take it, and after taking, you will be offering 11 lakh 20,000 to tax. Deduction allowable with respect to premium paid for insuring the machinery, plant or furniture is subject to which of the following is allowed? Must be against risk of damage, asset must be used by assessee, premium should have been actually paid. Of course, when all these conditions are fulfilled, then only the deduction is going to be available. Under section 32, depreciation is allowed when asset is owned and put to use. Owned and used, both conditions. Goli Private Limited has acquired second-hand machinery for 8 lakh on 18th October 20, which was not put to use in 2021. And this year in 21-22, you use it on 17th October. What will be your depreciation? Dekho, last year you don't use it at all. So 2021 no depreciation. And this year you use it for less than 180. But will half rate concept apply? Half rate is applied when? Purchased during the year and used for less than 180. Purchased during the year and used for less than 80. It was purchased last year. So this year we are only using it for less than 180. Is it purchased during the year? No. So this year half rate concept not applicable. 8 lakh ka full 15% and only normal depreciation will be allowed. Additional not allowed because it is second hand. So 8 lakh ke upar if you apply 15%, 1 lakh 20,000 you will get. 80 plus 40, 120. Depreciation is allowed on plant. Definition of plant includes what? Animal, human body stock? No. Plant ke andar vehicle is included. So motor car ka depreciation is actually charged as plant. Asit Limited has following assets: bridges, trademark, animal, vehicle, books. Depreciation will not be available on what? Bridges pe milega, trademark, intangible milega. Only animal pe it is not allowed. Otherwise, you get on also. Depreciation is not going to be allowed on animal. When any asset is acquired and put to use for less than how many days, then depreciation will be half, 180 days. Additional depreciation is available on second hand nahi, ship nahi, aircraft nahi, ships and aircraft nahi, second hand nahi, motor car nahi, office appliance nahi, new machinery ke upar additional depreciation will be allowed. Rate of additional depreciation is what? Earlier there used to be 2 rates, but now there is only 1 rate of additional depreciation, 20%. Lekin less than 180 hua to of course half rate will apply. Standby equipment, fire extinguisher, machinery can be capitalized once it is. If it is standby equipment, that means passive use, kept ready for use, can also be taken. Jetalal and company purchased AC and installed in office on 5th December 21. What will be the additional depreciation? Listen, office appliances, no additional depreciation. It has to be used in the manufacturing process. Jambal Private Limited owned an asset which it provided on lease to Pankaj Limited. Who will take depreciation? If the owner is Jambal, Pankaj is only lessee. That means Jambal will be taking the deduction of depreciation. Which of the following undertaking has an option to use SLM or WDV? The only SSC which has got option is power generation. Rate of depreciation for temporary wooden structure. This is where I say that ऐसे तो rate of depreciation block का will be given in the question, but for some of these MCQs you have to learn. So temporary wooden structures के लिए 40%. For air pollution, water pollution control equipment also it is 40%. Modi LLP purchased machine of 960 on 9th July 21. This machine was used outside India by previous owner. Whether additional depreciation will be allowed? Additional depreciation is not allowed on second hand plant and machinery. That imported ka counted as new is there in 35 AD 10 AA, not here. Rate of depreciation for furniture and fixture, very easy, 10%. Rate of depreciation for motor buses used in the business of running on hire. Motors used for hire 30% का rate लगता है. ABC Limited engaged in printing business and in the old regime of taxation. It purchased new machinery on 5th October 21 for 15 lakh. What will be the depreciation? See, 15 lakh is new machinery. So 15 lakh ka 15% will be your normal depreciation. And we are in the old regime. मतलब old regime का मतलब we will also get additional depreciation. In other words, can I say 15 lakh ka 35%? But mitro, 5th October को लिया ना, मतलब it will be restricted to half. 15 lakh ka 15% normal depreciation, additional because you are in old regime. So 15 lakh ka 35%, but it will be restricted to half, and the depreciation thus that you will get is only 260 to 500. Ashish purchased second hand machinery of 35,000 from SEMA and the asset was put to use on 15 September, more than 180. Paid 12,000 in cash on 4/7 and rest is paid by account pay check. Then what will be the depreciation? Second hand है मतलब normal मिलेगा, additional नहीं. And if that there is any 10,000 से ज़्यादा का cash payment, so that much will be ineligible. मतलब only 23,000 के ऊपर depreciation मिलेगा. That also only 15%. Why 12 is not allowed? Because cash more than 10,000. 23 allowed, and that also only 15%. Why only 15% will be allowed? Because second hand machinery पे additional depreciation नहीं मिलता है. So 15% of 23,000 is giving you 3450. Rate of depreciation for windmills installed on or after 144. This you are required to learn the block rate ka table. What is cost for the purpose of depreciation? Opening plus purchase minus sales. Yes or no? So what will we take for the purpose of depreciation in the block? Deemed cost or actual cost? We will be taking the actual cost of the asset. Manisha lesser gave on hire to Mr. Karan, where Karan will pay 10,000 per month to Manisha as installment. Agreement says that lesser has the right to sue for installment. She can sue for installment, but not recover the asset. So that is basically the difference between operating lease and finance lease. In other words, can I say ownership is going to transfer? If ownership is going to transfer, in such a case, who will get depreciation? The lessee. Lessor cannot repossess the asset, then lessee has become the owner. Depreciation in case of succession from a firm or sole proprietary concern into company shall be apportioned in the ratio of number of days for which the asset was used. Mr. A acquired asset and WDV of asset is 1,20,000. Asset was transferred on 5th August for 5 lakh and again gained by him for 450. Then depreciation will be calculated on what amount? On what amount will your depreciation will be calculated? Means opening WDV, you sell and purchase, sell and purchase. That means you have not done anything. Your depreciation will be calculated at 1,24,50. Opening WDV only will become your eligible amount for depreciation because same asset sold and purchased by Mr. Jawar, a retailer, acquired furniture on 10/5/21 for 10,000 in cash and on 15/5/21 for 15,000 and 20,000 by bearer check and account pay check respectively. Depreciation for AY 22-23 will be, listen, first of all the purchases are more than 180 days. So ek kaam karo, 10 plus 15 plus 20, that's 45 ka 10%, 4,500. No sir, bearer check matlab not allowed more than 10,000. That means sir this cash also not allowed. Nahi, this is 10. greater than 10 मतलब equal to पे tested, greater than 10 not allowed. So exact 10 allowed, 20 allowed. So 10 plus 20 total 30. 30 के ऊपर when we will apply 10%, 30 के ऊपर when we will be applying 10%, so we will be getting 3000 as our depreciation. Miss A owns an asset and WDV of this asset on 31st March 21 is 4,30,000. This asset was transferred for 5 lakh and assume that the same asset is taken back on lease. मतलब this is a case of sale and lease back. I have asset but I need money. So कभी-कभी ऐसा होता है, supposingly I have office but I need money. So I sell my office but I need to do business. I need urgent money. So I sell and lease back. In that case, I will get the lease rent. What will be the purchase price? I am selling for 5. But basically, if it's a case of sale and lease back, see, A is selling to B. Okay. So now B becomes the owner. What is B doing? Purchasing the asset from A and giving it back. Purchasing and giving it back. So B is only becoming owner for purchasing the asset and then giving it to rent. That means the depreciation will continue like the way it was continuing. Depreciation will be available on 4,30,000. X acquires an asset which was previously used for scientific research for 2,75,000. Deduction under 35 was claimed in previous year. 16-17. Asset was brought into use for business of Mr. X after completion of research. What will be the actual cost added? Have you acquired the asset and taken full deduction? Yes. That means now if you are bringing it to your other business, in WDV we will take cost 0. Where depreciable asset is acquired by way of gift or inheritance, what will be the actual cost? Same as capital gain. The जैसे we apply cost to the previous owner, here we will apply WDV of the previous owner. Asset acquired outside India by an assessee being NR and such asset is brought to him to India, used for the purpose of business. What will be the cost? See, 10 years ago you acquire asset, but today you come to India and start business. We cannot start depreciation on your original cost. Original cost minus the notional depreciation of so many years will give us today's value, cost less notional depreciation of so many years. Building which was previously property of assessee brought into use for business or profession. What will be the cost? Same. Original cost less the depreciation of so many years. If capital asset is transferred by amalgamating company to amalgamated Indian company, actual cost of transferred capital asset to the amalgamated company for the purpose of depreciation is going to be WDV. Just like we take cost to the previous owner, we take WDV of the previous owner. Which of the following situation depreciation will not be available? Cost include payment in cash in excess of 10,000, no depreciation. Interest in relation to asset after capitalized, so revenue expense, so no depreciation. Capital asset is transferred by amalgamating the company to amalgamated company. In this case, depreciation is going to be available. So wrong. Where building previously used for personal purpose brought to business, no problem. Original cost minus notional depreciation allowed. So not available only in the first two cases. It is answer A. Holding company transferred its asset to wholly owned subsidiary. Holding company has taken deduction of 35 AD. What will be the cost? For the subsidiary, what will be the cost? If holding company has taken 35 AD, that means holding company ka WDV is 0. And then holding to subsidiary, we are going to take cost to the previous owner and thus it is going to be 0. Carried forward, unabsorbed depreciation can be set off against, UAD can be set off against any income except salary and casual winnings. Mr. Ramdayal purchased asset of 5 lakh on 9th March 21 for specified business and claimed 35 AD. On 5th June 21, he brought the asset to normal use. That means, can I say you are misusing your 35 AD specified business ka asset within 8 years? Then whatever is the deduction taken minus the depreciation foregone. Deduction taken minus the depreciation foregone. That will be taken as your cost. See, supposingly I acquire asset of 1 lakh for, and that is plant and machinery, so 15% for 35 AD business. So I take full 1 lakh benefit. Now I shift that asset to other business. So in 35 AD business, I will pay tax on 1 lakh minus 15, the net of depreciation foregone. So 85,000 I will pay tax. That means, can I say I am reversing my deduction of 85? That means that will become the cost of acquisition for my other business. That is actual cost less the notional depreciation. What will be closing WDV? Opening plus purchase minus sales minus the depreciation. So opening plus purchase minus sales minus depreciation. That is going to be your answer. Where an asset is not exclusively used for purpose of business or profession, deduction of expense with respect to such an expense, we have to give proportionate. If it is not wholly used for business, then proportionate deduction is your only option. Kamlesh Limited is engaged in tea business. Turnover of Kamlesh Limited is 20 lakh. Depreciation is 1 lakh. Other expenses 4 lakh. Profit would be 15 after subtracting depreciation and other expenses. Business income would be only 40% because in tea business 60% is agriculture. Now depreciation that will be deducted. See, your net income from business after taking depreciation we are applying 40%. The exemption that we get for tea, coffee, rubber business is after net profit, after everything. So what will happen? This year we will take depreciation of 1 lakh, reduce only 1 lakh from the block, and we will arrive at the closing WD. Next year we will take sales, normal depreciation, do everything normal. Don't even imagine that it is tea, coffee, rubber. Do sales normal, expense normal, depreciation, everything is normal. And the final taxable income we will give 60% exemption for tea business. It's like that. So for depreciation it will be 1 lakh only. Anil incurred loss of 50,000 by trading in commodity derivatives other than agriculture on which no CCT. So agriculture may you don't pay CTT, it is okay, but other than agriculture if you don't pay CTT then it will be speculation. Resident individual has opted for 115 BAC. What will he lose? In new regime, this is allowed, but this is not allowed. So he will not lose this, he will not lose this, he will lose only this. 3511 and 352 are allowed even in new regime. PNSSC is engaged in the generation of power. She opted for SLM depreciation. 6519 she purchased furniture of 1 lakh. Depreciation 10% is charged. WDV is 80. That means can I say till now we have taken 20,000 ka deduction. 1 lakh mein we have taken 20,000. On 16th August furniture was sold for 117. That means we have recovered our 20 and 17 more. So up to original cost 20 will go as balancing charge in PGBP and 17 will be chargeable as capital gain. 20 as balancing charge under PGBP and 17 as capital gain. Sachin Limited set up manufacturing unit on 6/9/18 in Chittoor of Andhra Pradesh. It purchased new computer for office purposes 45,000 on 12 July. What will be the additional depreciation? Ladies and gentlemen, office appliances not eligible for additional depreciation. For notified backward area, what will be addition? See, just for knowledge I am telling you, Andhra Pradesh, Bihar, West Bengal, Telangana, these 4 states, there was additional depreciation of 35% for a temporary period. That is eliminated. If you remember, never discussed this in classroom concept also. Additional depreciation is going to be 20. Yakendra Limited set up manufacturing unit on 6/9/18 in Jalpaiguri of West Bengal and purchased new machinery of 45,000 on 12th July. What will be the additional depreciation? See, manufacturer, new plant and machinery and eligible. So now we will be giving deduction only of 20%. Earlier there was 35% for West Bengal and all, but now it is 20. Vishal Dev and Company's manufacturing unit set up in a notified backward area of West Bengal. Purchased new machinery of 160 on 5th Jan 22. What will be the additional depreciation? See, now the rate is 20, but if it is 5th Jan 22, that means purchased during the year and used for less than 180 days. In other words, we will restrict it to half. So 20% ka half, 10%, 16,000. Deduction under 32(1)(2)(a) for additional depreciation for purchase of coffee vending machine in office. Coffee vending machine, additional depreciation, office appliances, not available. Deduction under 37, sir bolega 100 question ho gaya, nahi I kya, what did I say? 2.5 hours or 100 question, whichever is later. Deduction under 37(1) will be available in respect of capital or revenue. 37(1) will give you only deduction of revenue expense. Which out of the following is not allowed under 37(1)? Penalty for contravention of law, personal expense, capital expense, none of them. Deduction under 33AB provides for a deduction in computation of taxable profit in case of assessee carrying on business of tea, coffee, rubber. All 3 cases mein we have deduction of 33AB. 33AB deduction is available if you are engaged in tea, coffee or rubber. Amount of deduction is amount deposited with NABARD or 40% of profits, whichever is lower. And for 33ABA, it is 20% of profits or amount deposited with SBI. So, for 33AB, ABA, if you just do the MCQs, the next few MCQs, you are prepared for exam. So, amount deposited with NABARD or 40% of your profits, whichever is lower. Assessing engaged in the manufacturing of rubber had taken deduction of 33AB by depositing 2 lakh with NABARD. In 21-22, withdrew 1 lakh from National Bank and purchased a SIM. That means it is not purchased according to the scheme. You have misutilized that balance, and that 1 lakh jiska deduction you have taken, now it is going to be taxable under PGBP. For claiming deduction under 33AB, the assessee in tea business has to deposit money with NABARD in how much time? 6 months from the end of the previous year. That's the normal time, but it has to be still before the due date of filing return. For 33ABA, it is before previous year gets over. SBI ka before previous year, but in 33AB it is 6 months from the end of the year or before due date of return, whichever is. Where an asset is acquired in the scheme as per NABARD of 33AB, then it cannot be sold for a period of lock-in period, 8 years. When asset is acquired within scheme with NABARD, it cannot be transferred within 8 years. That's the rule. But exception is if you sell to government, local authority, statutory corporation, these are exceptions. Where an amount is withdrawn by the assessee from the special account under 33AB on closure of his business. If you are withdrawing the money by closing your business, whatever is the amount that you will be withdrawing, because you have taken deduction earlier, it will be taxable. Site Restoration Fund 33ABA is available for which activity? For the activity of extraction of petroleum and natural gas. That is the deduction available for site restoration. In 2021, assessee engaged in manufacturing of rubber has taken deduction by depositing 50,000 in special account. 25,000 is withdrawn and spent as per the scheme. Then what will be the treatment? It is spent as per the scheme, no violation. So will we pay tax? No. But will we get deduction also? No, because we have already taken deduction. See, not taxable, no deduction. Why not taxable? Because not misused within the scheme. And why no deduction? Because when you deposited, you have already taken deduction. But if you debit to P&L, that means you have reduced your profit, then you will have to add it back. And you will not get deduction, no effect. If debited, how can you say no effect? If debited, that means reduced your profit. Will you get deduction? No, because you already took deduction. So if debited, we add back. Otherwise, we don't need to do anything. Deduction of which of the following expenditure is not allowed under section 35? Expenditure in purchase of land. Anywhere in income tax it is not allowed. If scientific research is done before commencement of business, then deduction will be allowed for expenditure. Within how many years? Scientific research ke liye period is 3 years. 33ABA deduction is available to those assessees who are engaged in the business of extraction of petroleum and natural gas. What is the amount of deduction? Deposited with SBI, or this time it is 20% of your profits, whichever is lower. Jamnadas is engaged in the business of manufacturing and incurred revenue expenditure on notified scientific research. And now, earlier scientific research was complicated. Some sections were 200, 150, 175. Now there is only 100%. Where any amount is standing to the credit of the assessee in special account or in site restoration account, it is utilized for any expenditure as per the scheme. Then obviously it is as per the scheme, not allowed. Why not allowed? Because already you have taken the benefit. Shall be allowed? No. Allowed proportionately? No. No effect bhi nahi. It will not be allowed because already you have taken deduction. Miss Ankita gave an asset of 1,50,000 to Mumbai University for scientific research under 35(1)(2). What is the deduction? Now it has become full 100%. Unabsorbed capital expenditure on scientific research. See, whenever there is capital expenditure on scientific research or family planning, it is treated at par with UAD, and with UAD it can be carried forward for unlimited period. Which of the following expenditure is allowed as a deduction for scientific research made before commencement of business? Salary, material, capital expenditure other than land, all of them are going to be allowed. Maximum deduction at dash would be allowed for sum paid to college or scientific. Now see, scientific research ka section is now become 100%. Joseph Limited engaged in manufacturing of cement, purchased new plant and machinery of 150 for used in scientific research. Then what will be doing? P&L. P&L mein there will be no depreciation. If there is depreciation, it will be disallowed because it is scientific research. We will get full deduction under section 35. Contribution made to approved statistical research association is available as deduction if it is 100%. Khushbu and company made payment of 7,80,000 to approved notified institution which undertook statistical research. On 9/9/21, the approval is withdrawn. Then what about deduction? When we made contribution, was it approved? Then subsequent withdrawal of approval will not affect our deduction. We will get our 100% deduction of 780. Maximum deduction as dash is available for Indian company. Scientific research, as pehle it was very difficult. These questions were relevant actually 2 years ago where there were different rates. Different for this subsection, different for that subsection. But now everything has become 100. Deduction at 100% of capital expenditure is allowed. What is an approved Indian company? Registered in India, scientific in-house research and development, approved company? Yes, all of the above. Any amount paid to research association which has objective of undertaking research in social science and statistical research. Everything has become 100%. Assessee engaged in the business of biotechnology incurred 15 lakh on purchase of land. Any kind of purchase of land, no deduction. Charisma Limited started business on 6th August 17. It paid spectrum fees of 90,000 to government on 7th Feb 22. It will be in force till 3031. For calculating number of years for deduction, where will we start? See, though we start business in this year, but we paid spectrum fees in this year. This is 21-22. Observe February 22. 21-22. So our deduction will start from, it is a payment based deduction from 21-22. Krish Private Limited made contribution of 10 lakh to IIT for scientific research. What will be the deduction? 100%. That is 10 lakh. Any sum paid by SSC to National Laboratory for Scientific Research, that will also go in 100%. ABC and Company Partnership Firm contributed 19 lakh to Approved Scientific Research Association for scientific research, that will also be 100%. SSC incurred expenditure on spectrum fees 12 lakh. This is exactly same as SLM method of depreciation to be effective. In financial year 21-22, you sold the spectrum for 14 lakh. That means already can I say 2 lakh ka to capital gain hai, more than the original price. And expenditure remaining to be allowed is 450. That means already you have taken 750 ka deduction. So 750 ka deduction of remaining is 450. That means from 12 lakh you have taken 750 ka deduction. So 750 ka deduction has to be reversed in PGBP, and 2 lakh capital gain also has to be taxable. 750 in PGBP, 2 lakh in capital gain. In case where spectrum fees is transferred and the proceeds of transfer are less than the expenditure remaining to be allowed, then what will be the deduction? Supposingly I incur 12 lakh. I have taken deduction of 8 lakh. So what is the expenditure remaining to be allowed? 4 lakh. And I sell it only for 3 lakh. Exactly same as SLM depreciation. The expenditure remaining to be allowed is 4 lakh and I sell it for 3 lakh. So 3 lakh I have recovered. Whatever is the remaining 1 lakh, I will take deduction. Expenditure remaining to be allowed minus the sale proceeds, that will be your allowable deduction. Deduction for spectrum fees is available only when the payment is actually made. SSC incurred expenditure on telecom license 10 lakh effective till 28-29. License was transferred 14 lakh. So 4 lakh to capital gain pakka hai. Original cost ke upar anything is capital gain. Expenditure remaining to be allowed is 8 lakh. Matlab 2 lakh ka PGBP deduction also you have taken. If remaining is 8 means 2 you have taken, no, so 2 in PGBP and 4 in capital gain. 4 in capital gain and 2 in PGBP given in option. Okay. Expenditure incurred on spectrum by SSC effective till 22-23. On 9/1/22 spectrum was transferred by 9 lakh. On this date expenditure remaining to be allowed was 875. That means we have to take only 875, but we sold it for 9 lakh. What is the deduction? Mitro, if we sell it for lower price, then we get deduction. If we sell for higher price, your 25,000 will be taxable in PGBP up to original cost, excess over original cost under capital gain. Deduction to zero hi rahega na, there cannot be any deduction. Capital expenditure is not allowed under income tax, but exception to this is, what are the exceptions? Capital expenditure is not allowed, but what are the exceptions? Scientific research, specified business, both of the above, you will be getting deduction. Which of the following is included in the definition of specified business? Distribution of electricity? No. Pharmaceutical product? No. 1-star hotel? No. It has to be minimum 2-star and above. 35 AD, 150% deduction of capital expenditure is available for business. See, some years ago when 35 AD was introduced, some businesses they gave 150, some businesses 100. But then over the years they said all the business will get 100. So there is no business where you will get 150% deduction. Sachin and company paid 4 lakh as spectrum fees. The fee will be in force till 30-31. What will be the deduction for 21-22? So 21-22, 23, 24, 25, 26, 27, 28, 29, 30, 31. It's a 10-year license and we have paid 4 lakh. So over the estimated life, 4 lakh divided by 10, 40,000 will be your deduction. Devanshi LLP started business on 15-19. It's paid spectrum fees of 10 lakh to government on 10/3/16. Means fees was paid earlier, but business we have started here. It is effective till 23-24. For calculating number of years, deduction will start when. See, now you may say that sir, fees was paid in 15-16, but you have not started business. Business is started in which year? 18-19. Don't be confused. This is not 19-20. This is 18-19, and thus, unless you start business, there is no question of deduction. Which of the following is not a specified business? Cold chain facility is a specified business. Fertilizer is a specified business. New infrastructure facility is a specified business. Storage of motor vehicle, not a specified business. Gunjan is engaged in setting up warehousing facility for storage of sugar, so specified business. Purchase land, not allowed. Machinery 5 lakh, allowed. Employees का salary 2 lakh allowed, and investment in mutual fund, financial instrument, land, goodwill, financial instrument not allowed. So only 5 lakh and 2 lakh will be allowed, that is 7 lakh rupees. Capital expenditure as dash is allowed for specified business. Specified business also it is 100, just like scientific research. Specified business ka deduction is also going to be 100. Capital expenditure on deduction under 35 AD excludes land, goodwill, financial instruments. Can I say all of the above? Expenditure incurred prior to commencement of operation for specified business would not be allowed. Pre-commencement also will be allowed provided, false hai, pre-commencement will also be allowed provided it is capitalized. Hashmi Private Limited engaged in specified business 35 AD. It incurred expenditure in 21-22 for goodwill. Goodwill not allowed. Furniture 60,000 allowed hai, out of which 20 is paid in cash. So 20 gaya, 40 remaining, and 40 bearer check. Ye bhi gaya. So goodwill not allowed, and cash exceeding 10,000 also not allowed. So nil. Loss of specified business can be set off. Loss of specified business can be set off against any specified business income only. Specified business loss only against specified business income. Tanwar Limited purchased machinery from OM on, for 7 lakh, for which was previously used by OM in Thailand. This machinery is used in specified business by Tanwar Limited. What is going to be the deduction? Second hand is second hand. This was previously used by OM in Thailand. What is going to be your deduction? See, listen. Now then, ऐसा तो हमको पता है that 35 AD के अंदर the rule is new machinery is going to be eligible, correct? लेकिन second hand is not allowed. So our answer may be 0. But if the second hand is imported, no, if the second hand is imported, it will be counted as new. Second hand imported counted as new. 35 AD 10 double है these businesses. चलो 150 पे stop करते. Let me give you a relief so that we have only 210 questions, but all the MCQ case studies. पहले question खत्म करने दो फिर बोलते हैं. Mr. Shiva built 4-star hotel on 1/4/15. He transferred the operation of hotel to Miss Sneha on 1/4/21. Whether deduction is going to be available. Splitting up or reconstruction of an existing business is not going to be allowed. Not allowed. ठीक है. So 150 पे we stop. PGBP में we have 360. So 210 questions that we are definitely finishing in our episode 7. Then अगर time रहेगा तो थोड़ा questions, or if I complete, so then in capital gain or something, then maybe it is possible that episode 8 को last episode करके we can wind up. Take this PGBP का next lecture as the most important lecture, because all the PGBP ka case studies will be discussed, covered, taught to you over there. So that is going to be the end of today's episode. Thank you for watching and your patience. Have a good night, please. Sweet dreams. Bye bye. Take care.